Okay, are we live? Let's see how this is working out. I will wait for confirmation that I am live. I think this is the wrong angle here, isn't it? I'm using my new computer. I think the camera is a little off. Let me see if I can't figure this out a bit. Maybe I got to move this way a bit. No, I got to move this way a bit. There we go. Odd, I got to sit a little off center for the new monitor. Okay, YouTube tells me I'm live. Let's begin. Big week last week, big weekend this weekend. Looking at Globex tonight. Let's just start by looking at futures. I think they were basically flat. Then we'll start answering some questions here. Yeah, S&P up three points. Not much. I think the biggest winner was Bitcoin, up 1.73%, up to trying to touch 61,000. I don't know if it'll hold that, but here we are. Okay, let us begin. First thing I thought of on Thursday when I heard of Tesla delaying its robotaxi was Mark with a "told you so" smile on his face. Well, when I first saw it dropping, I thought this is momentum breaking because I didn't get the news. You see the thing dropping first, and I thought, well, that's what momentum breaking looks like, and I thought that's what it was till I saw the headline delaying its robotaxi to get a better prototype, and I thought, wow, of course you are. You weren't going to show up with a cardboard box. I was pretty sure of that. So it was like, well, of course you're going to delay it. But I will admit to walking around with a kind of a smug attitude for a while that day, thinking, I knew it. I'm in your applied series, have less than 110,000 US and IB required for a margin account for non-US residents. Really? You have... is that really what the margin requirement is? 110,000? Oof. For margin, is it possible to have a theta portfolio with a cash account? No. If you're selling puts, man, all the dinging going on. Somebody must be watching me because they're saying something about me. Every time you message me, everything dings. I'm sure you hear it. 110,000. You can't sell puts. You can't sell calls because you need margin. What options from the applied series would you recommend for me to study follow? I think with a cash account, you can still do spreads, as long as you close both legs at the same time. Like you can be long and short, and that's a spread. I think you can do anything that has defined risk. So even with a cash account, you could buy a stock and sell a call, as long as you have the underlying stock. So anything that has defined risk, I think you can do, but you have to close it all at the same time. So any spreads, buying calls, buying puts, you can do that. Can't do synthetics. You can do covered calls. I don't even think you can do cash secured puts. Yeah, it limits you if you don't have margin. Are you sure about that 110? That sounds really aggressive. Usually it's like 25,000. That 110 sounds really aggressive. Could it be possible in the applied series to receive an email notification each time a new video is uploaded? No, because I don't own the platform that it's on. What I have done is, if you look under the market outlook each week, you'll see I think it's X and Instagram. You'll see a link for both. I use those only to send out notifications that there is an update. That there is an update on the site, and I only use it for that. So In the absence of being able to put a notification email in whenever I upload something new, just go to X or Instagram, look for the applied level, subscribe to that. I promise you, the only notification you're going to get from me is there's something new. I don't use it for anything else. So that will work as a notification. Where do you look for Form 4s for a specific stock? So every publicly traded company has to have an investors relations site. I gotta try to find the right angle for this. Has an investors relations site. There we go. That's the right height. And you can leave your email address there. And every time there's a new news story, a new presentation. What was that bubble thing? It's because I was doing. Look at this. Do you see that going on the screen right now? That is the most amazing thing. Every time there's a new any SEC upload, you'll get a notification right away. In fact, with ABR, I get notifications that I click on, and sometimes it's not yet available. So I have to wait like a minute or two and then click on the SEC report. So I do get it like almost immediately. Once they post it on their site, I get it right away. So I don't have to go looking for these things. All you have to do for any company you're interested in, go to their investor relations site, leave your email address. An NBFC company valued at $3 billion, PE 25, top and bottom line growth 25% year over year. Okay, I'm going to have to turn off these notifications here. Return on capital employed 15.8, return on assets, net profit margin 33, gives small loans to small businesses. Okay, okay, non-bank financial company. I didn't get that right away. Loan size 1,500 to 10,000 for 1 to 7 years. Is it a good buy? Well, I mean, I don't know how to assess them based on the credit risk that they're taking on. That's micro lending, really, and I don't know how they would assess credit. I think the biggest thing in assessing this company is how do they assess credit risk? They're non-bank financial company. What requires them to take impairments? What requires I'd want to know, at what point do you call a loan non-performing? For banks, there's regulation that they have to follow. They don't get to pick and choose when something is non-performing. There are rules to follow when something is non-performing. It has to be classified that way. What rules do they have for this? Because I think the value of this company would be in the believability of the assets it has, which is the loans. How much of those loans are actually collectible? How much of your income is actually income because you're not matching your bad debt expense with your income, that you're underestimating the amount. Now, I'm saying this from a perspective of I don't know. I don't know if they'd also be regulated in that respect. I don't know if they're outside the banking system and they have their own rules. But the first thing that I would want to do is assess the credit risk that they have. How do they assess credit risk? What security do they take? And at what point do they consider a loan non-performing? I'm going to throw that under the desk so it stops digging at me. I want to start a business. 2 ideas which has better future opportunities according to you. Becoming a Synic, a property manager for apartment buildings who helps them administrative, financially, and technically. Based in Belgium, 30 years old. Okay, there's one idea. Let me scroll down for your second one. There is no second one. Third, I said, here's 2 ideas. Here's one. Yeah, it is an industry. There are people who own properties who don't want to manage them, don't want the bother of managing them, usually hire a management company to get that done. That's very common. So you'd be in charge of apartment turnover, leasing, all that kind of thing. I don't know that that's a high margin growth industry. I don't know that there's a lot of technology you can bring to that. I mean, it's an administrative labor job, right? But it exists. There is a need for that sort of thing. It's just a matter of how many properties you can get, how many properties you need to earn a living. And I'm not familiar with Belgium, with the marketplace in Belgium. I don't know how it works there, but so I can't really say, oh, it's a great idea. I would say it's a very common thing that's been around for decades. Yeah, decades. I think as long as there have been apartment buildings, there have been apartment building managers. Looks like T-bills and the bond market are now trending together. 10-year, 3-month, both below the 50-week simple moving average. Could you discuss the yield curve theory behind this? Bond traders use it to confirm a trend. Note that in December, the T-bills were not trending with longer yields as far as, okay, well, all that is saying is there are very few times when yield curves invert. And usually they invert ahead of a recession, and usually in a period of uncertainty as to how long a trend can continue. So you have short rates rising, and the curve starts doing this. As short rates rise, the long end of the curve inverts. Instead of being upward sloping, you can have rates rising, and if the long end of the curve continues to increase, they're confirming each other. But at a certain point, when you raise the short rates to a certain point, the long end of the curve starts to invert. Now they're not confirming each other. That usually is a signal of heightened caution. Now, let's take the rates and the inverted curve. Let's start lowering rates. What you'll get is them moving in tandem together. Is you'll get the long end of the curve dropping, but also doing this at the same time, so that you'll get an upward sloping curve as rates come down. So all that signal is really saying is beware of an inverted yield curve, and the uninversion of the yield curve is a signal. That's all it's really saying. Yield curves spend most of their time upward sloping. Equity markets spend most of their time in bull markets. So it's, if you were long bonds, not long bonds, long equities, and you just held it for 40 years, you'll be okay, because most of the time they go up. About 30% of the time they go down. And that is, it's the period before it goes down where the yield curve gives a signal. I don't have to look at 50-week moving averages or anything like that. All I have to say is the yield curve inverted, and is it going to uninvert? The leading indicator there is the 2-year. The 2-year tends to lead the Fed funds rate by usually, I did the analysis on the site. I forget how long it leads by, but it usually leads the Fed funds futures by a number of months. So if you see the 2-year really coming down, it's a signal, pretty good signal that the market expects the Fed to cut rates. And for it to continue to come down, there must be a good reason why the market would think that would happen. So sometimes a lot of this analysis is really just looking at a very simple thing like a curve inversion. Do you think America is a nation in decline? And if so, how likely do you think it can recover? Well, when we say in decline, on what dimension? It is a nation today that faces a lot more competition for capital than it did 30 years ago. Number one, 30 years ago, there was really only one country in the world where you would invest serious growth capital. That was the US. Not so much now. It does face challenges, but it did it to itself. um, the push for globalization is going to lead to convergence. The theory of convergence was that lower income nations would see their incomes rise. And I remember when I was first introduced to convergence, I kept thinking, but if you're converging, what is stopping the high income nations' income from dropping? I mean, if capital is going offshore and jobs are going offshore, how can the developed nation just continue to grow? Wouldn't they converge? Which is what we're seeing now with some developed countries. Is we're seeing them actually declining in per capita GDP. So we are actually seeing convergence happening. There are many things over the past 30 years in which the US has significantly dropped on in terms of the quality of what the quality of life was 30 years ago versus today. There are many things where the US has gone in the wrong direction. Let me list you some fairly common ones that everyone would agree with. The US is the undisputed leader globally, undisputed leader in type 2 diabetes. Hands down, it's not even a competition. The US is number one. So if you want to say we're number one, type 2 diabetes, you're right. You're number one. Pre-diabetes, you're number one. Obesity, you're number one. Depression, you're number one. Anxiety, you're number one. Opioid deaths, you're number one. Incarceration as a percentage of your population, you're number one. Where you are not number one is educational standing. Where you're not number one is the health of your population. Where you are number one is the amount of money you spend on healthcare per person. So that never used to be the case. The US used to be the beacon of education. It's where everybody would go for the best education. Not so much anymore. High school scores are extremely low. And on some counts, the US is worse than some third world countries on some social measures. Is it a country in decline? It depends on the importance that you put on those things. If you say education of our youth is not that important, it's the size of our military. Okay, well, then that's a trade-off that you make. As economics says, we always have a trade-off, guns or butter. If you said, well, we're number one because we've chose guns, well, then yes, there is no military in the world more powerful than the US military. But there are many countries with a population smarter than the US. There are many countries with a population healthier than the US. There are many countries with a population safer than the US. So do you want to say we have the best military in the world, but our education, our health, and our safety, let's not look there? It depends on what you think is important. So to say it's a nation in decline, as far as innovation goes, no. US is still undisputed number one in terms of innovation, mostly because the US has the strongest property rights on the planet, which means the best patent law on the planet. Not so much in other countries, but they are catching up. On the superficial things, capital and military might, yeah, US is number one. On the quality of life and important things, health, education, safety, they haven't been number one for a long time. Where they are number one is the most number of guns per capita. Where they are number one is the most number of people dying each year at the other end of a gun. Where they are number one is the number of mass shootings per year. This is not something to be number one in, right? It's not something to be number one in. And I would say that they're probably one of the most divided nations on the planet from a social perspective. The most divided, that almost every issue is polarizing, that it's hard to get agreement on any one issue. On those respects, all empires decline from social decay, not from a loss of military might, not from a loss of that, but from social decay, the decline inwards. That from that respect, yeah, you could say that they are a nation in decline. But I wouldn't bet against them in the market at all. I wouldn't pick a fight with them at all. But I also don't know that I'd feel safe walking down the street in a larger city without catching a bullet, right? I lived in Cleveland for 3.5 years. I don't know that there was a night that I didn't hear gunfire outside. If you didn't hear gunfire, you simply just weren't listening. But you can, once the sun goes down, the gunfire starts, and it's every night. That's a tough reality to accept when you have to look at your country on certain measures. Now, I'm just as critical as Canada. Canada is a country, I would say, in decline. It is a country in decline for its own particular reasons as well. I'm not just picking on one country. But these are all facts that you can look up. No point did I say that the U.S. is in moral decay. I made no moral statement about it at all. These are just numbers and facts that you can look up. So, yeah, when we talk about decline, what's important to you? What do you think? How likely do you think it can recover? You've got to solve the social civil war. It's just as bad as a civil war. It really is. Rather than the North and the South hating each other, it's the left and the right. And there's a lot of daylight between them. You've got to solve that problem. You need a centrist. You need somebody, it doesn't matter what party it is. You need somebody that brings everybody to the center where the left says, I guess I can live with that. And the right says, I guess I can live with that. Where it's not completely left or completely right, but that you can live with it. You need a centrist. So you need a Reagan, you need a Kennedy, you need somebody that the whole country can get behind. Reagan's second election, he only lost one state that had 3 seats. He won everything. That's a united country, right? He won everything. How much conviction is to be now bullish on small caps? Well, I always said with small caps, you're not really going to get good numbers. You're not going to get the fundamentals to support higher prices till you have rates coming down. We have the promise of rates coming down, so a lot of money went into small caps in anticipation of it, which is what you have to do. You have to invest for what you think is going to happen tomorrow, not what's going on today. And if we do believe that rates are coming down, if you do believe Trump is going to win, which it looks all but likely at this point, then he wants lower rates. And if Powell doesn't give him lower rates, he'll put somebody else in. So somewhere in the next year and a half, you're going to have lower rates. And for him, the lower, the better. So you're going to get lower rates, which means that based on just the economic data and the Trump trade, it would make sense to be in small cap stocks. It would also make sense to be in utilities. Look at XLU. What a beautiful performance on XLU. Thank you very much. A week after I did my my synthetic long at 70 for March. What are we at now? Almost $72 from 68.50. We had a nice $3 run on an ETF, on a utility ETF. Those kind of moves don't happen all within a week. Thank you very much. I'm very happy about that. So I don't know that I would say I have huge conviction. I would have more conviction on the S&P 600 than I would on the Russell 2000, simply because the S&P 600 is an index of profitable small caps. The Russell 2000 contained unprofitable, but they were beaten up by more, so the rebound could be stronger. If you want to play the small caps, I would at this point, if you can't find particular names that you like, I'd be very careful about just going all in because we haven't had rate cuts yet. We haven't had them yet. Um, July, the odds on or the probabilities on July are a zero, which means not really till September, and you've got 2 quarters of earnings to get through without that rate cut. The first full quarter of a rate cut will be the fourth quarter. So things could get fundamentally worse before they get better. I'd be looking, if I really wanted exposure to IWM or IJR, I'd be looking at 30 delta puts, 25 delta puts, something like that. Or I would do a risk reversal. I'd find a 25 delta put and use that to finance a 25 delta call. There we go. If it drops, okay, I'll get it at a lower price. And it's eventually going to go up because rates are eventually going to come down, but it gives me some time. And if it goes up, well, then it goes up. Or you could step into it, buy a 25 delta call for, let's say, March. When you buy calls, you want long periods of time for March. If small caps rally, you're winning. If small caps pull back, you can go even deeper out of the money on the put to sell the put to finance the call. So yeah, step into a risk reversal with knowing that, well, I'm going to buy the call, and if the stock drops, I'm going to use a put selectively to finance that call. Live in Pakistan, passed my level 1 in May. Haven't been able to land a job in the industry since. Okay, so we have to unwind whether that is a function of your education or a function of your country. Planning to move towards freelancing. Do you think there's any value in your AL content from me? So with freelancing, what you should look at, I think there are a number of things. There are sites where you can publish your work. Substack is a good one. You'll give some things away for free, and then you'll publish some work. But you have to be more knowledgeable about an industry than 90% of the retail traders out there, which isn't too hard, and as you continue on, you'll get better. YouTube is a great source to publish some videos about particular stocks, particular sub-industries. You start to get a following, you monetize that. So when you do something like this, when you first start and you say, I'm going to publish research, don't expect 50 hedge funds to start paying you money with no track record. That's not an entry-level position. You're going to have build a name for yourself. So you'll start with Substack and with YouTube. You'll publish some work. Maybe you'll move up to some of the paid sites. I think there's Seeking Alpha, and there's another one. The name keeps escaping me. Then you can look at the YouTube. There's a YouTube ecosystem where everybody's on everybody else's channel. I'm sure if you follow the finance section on YouTube long enough, you'll see that everybody has their own channel and everybody appears on everybody else's channel. Try to get in on the YouTube circuit to start building your audience, and that's what it's for, to build your audience. Between all of that, if you're good, you'll have a track record of having good picks, of which you'll document your track record. Then you can start to maybe get paid more seriously for some of that. But you have to start somewhere. It's not impossible. It's just selling your research to Berkshire Hathaway, for example, is not an entry-level position. It's not what's your name again? That's not how it works, right? You need to be somebody. And if you're not, you need to become somebody, which is usually the entrepreneurial route. Is you say, well, who's my target market? It's going to be the retail investor, and I'm going to look at just this sector, and I'm going to be the best at this sector. I'm going to have a YouTube channel. I'm going to have a Twitter account or an X account. I'm going to have an Instagram account, and I'm going to communicate, and I'm going to show my value. I'm going to have a Substack where I write longer things, and then I'm going to have, on top of my YouTube, on top of everything that I do, I'm going to have a paid Substack, and maybe you have Patreon. Maybe you have a website, you have a Patreon where you then say, look, I have longer form videos on this that I then, for a certain fee, you can access this, and you just slowly build out your ecosystem, right? But it is entirely possible to do. Absolutely entirely possible to do. What are your thoughts on Trump near death? Well, I don't know if I'd call it a near death experience. He didn't have a near death experience. He wasn't close to death. It nicked his ear. He got blood on his face. He stood up, and the first thing he said when they stood him up is, "Let me get my shoes." He was concerned about his shoes, which I imagine were expensive shoes. So get the man his shoes. And then, of course, the photo op with the fist in the air and the blood down the side of the face. So it wasn't near-death experience, but it was an attempt on his life. It was clear it wasn't just a stray bullet that caught his ear. Somebody was aiming at the guy. Which doesn't do the left any favors, because I'm sure Fox News will be all over the conspiracy theory that because the Supreme Court now said presidents are immune, that Biden ordered the hit on Trump, and all that shit's going to start. I'm pretty sure of it. What degree will capital markets be affected? Well, they're not. If they would have been affected, they would have been affected on the open on Globex. The S&P would have been down 100, 150 points. It's flat. In other words, okay, a bullet went by his ear. The guy's okay. Nothing has changed. He's pretty much going to win. Let's get on with things. Yeah. If everything is going to have sensors in the future, I think analog chip makers will see massive demand. I've been saying that for about 6 months to a year now. Is analog. Everyone's focusing on GPUs and maybe CPUs later on, but if you think there's going to be the Internet of Things and more devices communicating with the outside world, you need analog chips. Anything you bring in from the outside world, process and push to the outside world, you need analog chips for that. Yeah. If so, will this lead to an aggressive bull rally like NVIDIA? Not really, because you can get analog chips from a number of suppliers. Analog chips are not as technologically advanced as a GPU. And so, no, I don't think that you'll get an aggressive bull rally, but I think you'll get companies that will whose earnings will benefit. Apologize about 2 weeks ago being childish. Who's this? Walter. I want to know I fully respect you. All right, Walter, I'm going to be watching here, but thank you for that. But it's just not the way men act. When would you sell spreads over naked puts? Very flat skew. So skew looks like this normally. So here's a put. The further out of the money you go, usually implied volatility increases. So take that skew and flatten it such that your put is over here, and the further out of the money you go, the put price is not elevated because of higher implied volatility. That makes a spread super cheap. So I can sell a put for $2 and then buy a put $5 lower for 50 cents. I'll take it. That's $1.50 to get a $5 spread. The most I'm risking is the most I can lose at that point is $3.50, and I'm betting $1.50. I'll take it. What I don't want is very high skew, because if I sell a put for $2 and then I go $5 down and it costs me $1.60 to buy that put, I'm risking making 40 cents to lose $5. I don't like that. the cheaper it is to buy the further out of the money put, the more, you look at that, you say, why wouldn't I? I mean, if I'm $2 to lose a lot, or $1.50 to lose five, the most I can lose is 350. I would say, well, yeah, that risk reward to me makes a lot of sense. But risking $5 to make 50 cents, that doesn't turn me on. You mentioned last time a good business model is to become an expert in a particular sector and then sell that knowledge to investors in the form of reports. I just described that above. Yeah. There shouldn't be an issue if you trade ahead of selling the report, as long as you disclose your position in it, right? Well, if you're gonna be ethical about it and do it right, if you are writing a report or saying, "Look, I like this stock because I think it's going up," uh, saying that you have a position in it, it's the ethical thing to do. It's the moral thing to do. So that the person reading it can then say, okay, well, I'm going to take, I know that you want to be bullish on this because you own it. So did you own it and then you want me to own it? Or did you write this report and say, my God, I should own this? I don't know what the answer is, but there should be some disclosure of it. But if you're putting a video up on YouTube and monetizing it, those requirements don't apply to you. Right? It's if you are putting your research out there on a broader scale, on a more institutional scale, then yeah, these things they're actually requirements. But you should disclose just because, right? I would seem to think that. Also, isn't there a possibility that if you sell detailed reports, the customer could copy them? Yeah, that's what happens. Is you write a report and you'll give it to somebody, and somebody will just email it to somebody else, who emails it to somebody else, who emails it to somebody else, or that person just emails it, send to all, and sends it to everybody in their email list, or somebody else gets it and then decides to sell it as their own, change the name, and they said, welcome to the world. Welcome to the world of digital assets, where if you don't secure it somehow, you risk losing it. So for the most part, when an institution puts out research, when the sell side puts out research, it's because they do want a whole bunch of people to buy it. So they're not too concerned with how it gets around, because they do want everybody to buy it. But if you're making your living off of your intellectual property, get used to pirates. You get used to that very quickly. Get used to people copying, sharing. Get used to it. Just get used to it. In the beginning, that's not so bad. The more people who read it, the more people who will recognize your name, the more people who will go to your YouTube channel or your Substack. But that's the world we live in. Yeah. How do you access Globex? It's nothing that I have to try to get. With Interactive Brokers, you just with futures trade on Globex after hours. You just get it. It's just there. Coke or Pepsi? Yeah, it's the diet in front of each one, not the Coke or Pepsi. Indifferent. Diet Coke over Diet Pepsi. Pepsi Max over Coke Zero. Depends. I'm not. I used to be more into Diet Coke, not so much anymore. Every now and then, not so much. Half my macro outlook is 50-50. Isn't that saying the same thing twice? Half my macro outlook is 50-50. I'm 50-50 about being 50-50. Part of me feels like when the Fed lowers rate, growth stocks can explode, like we are in 95 and about to go through 96, 97, 98. I also think it is possible that we get a recession and anything but growth performs well. What do you think about barbell high growth and deep value approach going forward? Yeah. That would be an XLY, XLP portfolio. In the applied level, I show over time that a 60/40 XLY, XLP portfolio outperforms SPY. That if you broke it down to just two sectors, consumer discretionary and consumer staples, 60% on discretionary, 40% on staples, it does outperform SPY. Outperform. That doesn't mean it goes up every time. It just outperforms SPY. But sure, you can do that. So think of QQQ and XLU, where you have tech on one side and utilities on the other side. If tech really does well, utilities are going to do great because tech is energy intensive. How many liters of Fresca does a Tesla? How many liters of Fresca? I think they drink it all day long, right? If you don't understand that reference, it's a reference to a TV series that is on Prime called The Boys. For The Boys, think of Heroes. If you remember the show Heroes, take Heroes and Avengers, smash them together, but make it stupid. And that's The Boys. It's a stupid show. I mean, it's almost a juvenile show, really. It's stupid, but it's so stupid it's fun to watch because it is stupid. And I think every episode they try to put out the most stupid scenes they possibly can, like scenes that are just, that push the limits of stupidity. But it's kind of a fun thing to watch. But the Fresca thing is part of a cult thing that you see in season 2. I don't think selling research report is a good business personally. Many companies get free research reports from all the major banks already. That's true. I get a bunch of free stuff from JP Morgan. But it's the retail investor that doesn't get it. And if you are good in a particular sector, what I get out of the banks, what I get out of, and I've had stuff before from Goldman, from a whole bunch of different companies, very broad reports, or in a sector, very broad sector report. Sometimes you get company reports, but not often. What I found was missing in all of that was very specific stuff to very specific sub-industries or very specific companies. So I didn't find a lot of good stuff on, let's say, like Canadian apartment REITs. I'm just going to throw that out as an example. If they don't have any, if whatever broker you're with or whatever bank you're with doesn't have any research on that, then you don't have any research on that. And maybe the research you get on it is too high level. So it wasn't, granular enough for me. And it told me things, but it didn't teach me things. So that when I read the research for a particular industry, it was, okay, I don't know what this means, and I don't know what this means, and I don't know what this means. So I didn't learn anything from it unless I already knew what they were talking about. So there is a limitation there. People, for the most part, want to learn. They want to know. It's not as if, I shouldn't say, so some people want to learn. I think there's quite a few that are happy to outsource their thinking, but they want to learn. It's hard to learn from these institutional research reports because if you don't understand the industry, you won't understand what they're saying. You won't understand most of what they're doing. So I think that there is a marketplace, a major underserved marketplace for the retail investor in terms of both education and analysis. If you marry the two together, I do that, and it's well received. I think there's a big space for that. Lots of room for it. How many sub-industries and how many countries with companies that are specific to each country? I mean, it's endless. It's endless. Whoever exercised all those ABR calls Thursday night deserves my sympathies. They might have sold in the morning because it didn't. I mean, in the morning, by the it was trading up in the morning. When I left to go to my eye appointment, I was thinking, on the way back, wow, I'm going to have to take that loss today. Thinking about, well, what am I going to do with the calls? Do I roll them over? The liquidity isn't as good as I would like it to see, but so I was really debating what I'm going to do. And then that happened. So maybe whoever called them from me decided to exercise them the next morning. If they didn't, yeah. But they were long the call. They would have lost all the money on the call anyways. They would have lost anyways. That couldn't have been one party exercising those calls, could it? There was only 27 contracts, 2,700 shares. I don't know. Like when you get the notice, you're not told how many counterparties there were. Well, really, you have one counterparty, which is the clearinghouse, but you're not told how many other who's on the other side or how many people are on the other side. Plus, you have to spend years building a name for yourself. Then you could potentially sell a subscription fee. So I've heard that that sort of pushback before. Well, it would take years. I remember I was talking, it was way back, and the person I was talking to was 30, 32 in their early 30s. And they were sorry that they never went to school, that they never went and got their degree in something. I said, there's no stopping you now, and it's a 4-year degree. He said, well, I'll be 36 when I graduate. And I said, well, you're going to be 36 anyways. You could be 36 without it or 36 with it. I mean, you're going to be 36 anyways. To say it takes a few years to build a name for yourself, a few years are going to pass anyways. So where do you want to be in a few years? Plus, it's going to take you a few years to become an expert in that industry anyways. In the meantime, you have YouTube, you have Substack, you have multiple avenues in which you can start building a revenue stream. You do have that. So I wouldn't look at all the negatives and say, you can't do it because of this, because of this, because of this, because of this. It'll never happen. When I started with the CFA business, just to give you an idea, Schweizer was 80% of the market. I mean, it was the thing. There were a few smaller names here and there, but I mean, it was Schweizer, and that was it. I was an unknown entity, just a university professor, no name in the CFA space. That if I had built a website and said, okay, I'm selling CFA subscriptions, come and see me. Who are you? Who the hell are you? Nobody would have known who I was. So I put my stuff on YouTube for free. I put level 1 on YouTube for free, and I monetized it. And then the screens, all the writing on the screen, I made PDFs of all of those screenshots, and I sold those $7 each. And then for level 2, I went to Vimeo, and I did a $17 a month subscription on Vimeo, built slowly and focused on the value I was delivering, and stuck with it and stuck with it and stuck with it. 7 years later, I sold it for numbers you wouldn't believe. So, to say at that time, if I would have talked to an industry expert in the CFA space saying, I'm going to launch a CFA prep business, they would have said, you're never going to be able to compete with Kaplan. Kaplan's 80% of the market. Who are you? You're never going to get this done. It's going to take you years to get it done. And it did. And I'm very wealthy today. So anybody who says it's going to take years, that is an advantage. And I'll tell you why it's an advantage. Because you can discourage a lot of people by saying it's going to take you years. Where's the competition? right? A lot of people will just get discouraged because it takes so long. Seek to do the hard things because it's not a crowded industry, and it's not crowded when you do the hard things. Because when somebody says to me, well, that's hard to do, that's why the competition won't do it, precisely because it is hard to do. That's why they won't do it. Well, it's hard to build a business like that. That's why many people won't do it, because it is hard to do. Seek to do the hard things, not the easy things. The easy things are crowded. Everyone's doing the easy stuff. Everyone's doing the easy stuff. I'm going to be an influencer on Instagram. Yeah, you and how many other people? I've heard people say to me, you should have a podcast. Yeah, but everybody's got a podcast these days. Everybody's got a podcast. Unless I can think of a unique and interesting approach, what would I do in that space? The reason I don't do it is because it's easy to do. Everyone's got one, right? Anything that's easy to do, everyone's got it. But when we look at the applied level as an extension of the CFA content, the detailed seminars I do on each of the sub-industries, those are not easy to do. Each one of those are 3 to 4 week deep dives. And I mean deep, where you're going in all sorts of directions and you're learning everything you can. And at each step along the way, you think, this is too big, there's too much. And you just keep going and going, and then you bring it down. You find the simplicity in all of that complicated mess, and you bring it down to that. It's hard to do. It's time consuming to do. I choose to do it because it is hard to do. If it was easy, everyone would have it. Everyone would be doing it. Kaplan would have an applied level. UWorld would have an applied level. Wiley, well, UWorld owns Wiley, but all of them would have applied levels. All of them would have that, but they don't. Because to do it, you need two things. You need deep industry experience, and you need some research methodology. The type of research methodology that a PhD teaches, when you go through a PhD, the type of methodology you learn there is exactly what you need. So you need 1 foot in the academic world, 1 foot in the real world. Find me somebody that can do that has the time that I have. Because at this age, they all have families or obligations or jobs. I choose to do it because it is hard to do. I've had some ideas handed to me. Why don't you do this? Why don't you do that? Yeah, but that's easy to do. And because it's easy to do, everyone will do it. Choose the things that are hard and stick with it, I'll tell you, after, when I put the first CFA video up on YouTube, after 1 year, the income wasn't that great. You look at what you're making per day on YouTube in terms of advertising, it was pathetic. It was $30, $40 a day. It was like, well, this is not quit my job money, or as they call it, this is not fuck you money. And there were many times where you look at all the work you've done and the little dollars you're making, where most people would have just given up and said, this is not worth it. It's not paying. How long can I keep doing this? You stick with it. You stick with it. You stick with it. And then off it went. If you're delivering value, people will come to you. You will get people. If you focus on the value that you're doing, the money is the afterthought. That will show up. But if you're focusing on the money, you're going to chase that forever because you're focusing on the wrong thing. Do the hard things. Very few people will. Who is your favorite character of the 7? I'm only on season 2. I think Deep is an idiot. It's hard to like that guy. I don't know. I kind of like the villain in all of this. There's just something about him that I kind of like. I just kind of like him. He's just, humanly, pragmatically evil, but he doesn't think he's evil. He thinks he's great. I don't know. I not that I aspire to be anything like that, but I kind of like him. U.S. stocks. We do research and have weekly call discussing the markets. Walter, if you're doing something here I don't like, I'm going to stop you. So you better have a legitimate business. This is starting to sound like that. What's that company that I mentioned like a month ago or something like that? It was just it's just a pyramid scheme, Walter. If you're doing something I don't like, right? Do you own a gun? No, I do not own a gun. I don't own a gun in Canada. I never owned a gun in the US, never had a desire to own a gun in the US. But for some reason, I do feel a need to have a gun in the house in Costa Rica. It's a long process to get a gun, but also comes with a psychological test. And you can only have two, but I don't know why. But for some reason, I just feel that I should have a gun in Costa Rica. I don't have one yet. Reiterate your investment thesis on Goodyear Tire. I recall you were assigned shares at, no, I was assigned shares at 12, 30 cents on the put, average cost 11.70, and might write additional 11 or 12 puts. Could you give a position update of any? So it's a company that recognizes that it has a problem. Step number one, right? When somebody doesn't recognize they have a problem, that's the bigger problem. So you have a friend who's an alcoholic. That's a problem. Your friend does not even recognize that they're an alcoholic. That's the bigger problem. Because before you cure the first problem, you must cure the bigger problem, which is getting them to recognize they have a problem. Once they recognize, then they are in charge of the problem. They can fix the problem. This is the problem with governments: is you have a lot of debt, but they don't even recognize it as a problem, which makes it the problem. Goodyear recognizes it as a problem. So step number one. They're looking to sell assets. I think they have a bid on one of their tire divisions. They are going to sell that, which is a step in the right direction. They're solving a problem they recognize right away. That's number one. Look at that. Do you guys see that on the screen when I put my thumb up? It puts a thumb up. I wonder what happens if I put two thumbs up. Oh, look at that. Can you see that going on? What is this? Is this YouTube doing that? That is pretty clever. Now, I'm not going to do this. I'm not doing it to you. I just want to see what happens when I do this. Where is it? Where's the camera? So it has a moral filter. It's not going to do anything. Okay, well, that's interesting. Well, look what I can get done. How is it doing that? It never did that before. That is so clever. So I don't mind owning it at this price. They did cancel their dividend a few years back to conserve cash. I think they canceled it. I don't know how long ago they canceled it, but they did cancel it to solve this problem. And going forward, you're going to need more tires, not fewer tires. Electric vehicles go through tires twice as fast as internal combustion vehicles. So that means you need, if you're going to believe in an electric future, which I think it's inevitable that we do get to a future that includes electricity in the vehicle, whether it be hybrid or all electric, you're going to need tires, more tires. So, I feel comfortable at these levels. It's not much to risk. Goodyear they were down, were 1060. Now they're back up to like 1140. They had a nice rally last week on the news of the sale of one of their brands. Took that opportunity to sell half the position on $11 calls at 85 cents. Half. Just so that it opens up the ability for me, if it drops down, to sell 11 puts, because then I'll have, double the premium on that. Since we're seeing lower inflation and consumer sentiment, can we assume that we're seeing slowing economy? I don't know that I would relate the two together. I would say we're seeing lower inflation because we're seeing fewer supply constraints. I think we're seeing more effective hiring. You have more companies that have rationalized their workforce, meaning they're more willing to lay off people today than they were before, which lowers their cost and makes them more competitive. They can lower their price in lowering the cost. You're also seeing price wars in a number of areas as well, especially in EVs. You're seeing price wars, right? So that brings that down. That also, when new car prices come down, you're seeing used car prices come down. The automobile industry is also re-entering its traditional state, which is a state of overcapacity. As far as transportation goes, you probably have the highest rates on transportation you're going to have right now, unless you can think of something else that bottlenecks the supply industry in transportation. There's not another canal to shut down. Panama Canal is at the lowest. Suez Canal is being avoided. Unless you can think of another canal to shut down, rates are pretty much at a peak right now, which means they can only come down from here as you solve the world's problems, and they do get solved. And technology is deflationary. There's no other way around that. Technology is deflationary. So we are going to return, I think, to the 2010s to 2020s, where technology is the thing to be in. More and more of your life becomes digital. More and more of your life moves online. You had massive money growth for those 10 years. No inflation because there were no supply chain issues. I think we're returning to that. So I don't know that I would say the consumer sentiment is related, that the consumer sentiment is causing the lower inflation. If anything, lower inflation should raise consumer sentiment. I think you're seeing falling consumer sentiment sort of for the same reasons that I've been looking around saying, how are people making it? You have housing prices in the US hitting all-time highs. The housing index is at least hitting all-time highs. You have rents that are unaffordable. You have food costs that are extremely high. You have super expensive to fill your gas tank. Insurance rates going straight up, making it even more expensive to drive. When I look around at the price of things, I am generally price insensitive. I don't have to look at prices, but I do. And I ask the question, how are people getting by? How are people getting this done? And the answer could be is they're not really. That at some point of increasing margins and increasing margins and increasing margins and increasing corporate earnings, that if you think of the identity that GDP output equals national income, GDP equals GNI. If the share of GNI by corporations keep rising, the share that's left over for consumers, unless the corporations are returning all of that, when they do return it, they tend to return it to the investor class, not the consumers, because they're not a government and it's not a tax. So it is let me see if I can move over a bit here. There we go. So it is the investor class that gets it, the very class that doesn't need it, in terms of their need for it for consumption. So you can only go so far and push it so far before you squeeze out the consumer. And the increase in credit is consistent with a consumer that's saying, I want stuff, I just don't have the money for the stuff, but God, I want stuff. I think that's more likely what's going on, is that they are two separate forces. We have a long essay here. Okay. Here's my theory to explain some of the recent bullish price action on Tesla. There have been several reports that Elon's been meeting with Trump, and an advisory role may be up for grabs. Tesla's stock really started going to the moon after the first presidential debate on June 27th. Well, as Trump's odds of becoming president increased due to Biden's poor debate performance. I think the to the moon thing had more to do with ARK's $2,600 price target, and then Tesla, and then Musk saying, no, it's more like 32 trillion. We should be worth 10 times more than the most valuable stock. And then a couple days later, his statement about the shorts will get crushed, including Gates. I think that was more to do with anything. Following 2016 election, Goldman Sachs went to the moon as several execs from GS joined. Yeah, well, that is typically what happens with Goldman Sachs. It happened when Paulson became Treasury Secretary as well, because they're in positions to benefit Wall Street. And Goldman Sachs is Wall Street. It's not a stock being traded on Wall Street. It is the street. Apple also performed well when Tim Apple worked closely with Trump. Well, Apple would have performed well even without it. So this is all circumstantial stuff you're looking at. I don't see cause and effect here. I see proximity and coincidence, but I don't see cause and effect on that. You can't argue that Apple's products are accepted simply because of his association with Trump. I seriously doubt that. And if that were the case, if it was his association with Trump, Apple TV would not be as woke as it is. I mean, every new series that comes out, is a game of where's the lesbian? How quickly will the lesbian scene show up? There's always lesbians. There's lesbians in everything. I'm watching the new Jake Gyllenhaal one now. With called Presumed Innocent. It's pretty good, but it's as woke as you can get. It's a biracial marriage. He's got black kids. His second seat lawyer is black, who's trans. Look at her carefully. That's a dude who's trans. And the son of the girl he supposedly killed is a guy, but is actually trans. It's a girl. So they've got two trans. I mean, it's as woke can get. That's not Trump. That is not Trump. So I don't think that it was an association with Trump that made Apple, that helped Apple perform. It is just one of those things where what's he going to do, right? What's Tim Apple going to do? Tell Trump to piss off? You don't, as a CEO, you don't tell a politician to fuck off. You don't tell a politician, I don't want to have anything to do with you. You have to be political because you don't want enemies. So what else was he going to do? What else is any CEO going to do when the president calls, no matter who it is? Yes, Mr. President. No, Mr. President. I'll be right there, Mr. President. So I don't really know that is cause and effect. Let's see. Was able to get Apple products largely excluded from Trump's tariffs during the trade war. Well, regardless of who was president, if there was a different president, it would have been Tim Cook that still would have lobbied the president to exempt Apple. That's just being a good CEO. I think now the market may be pricing in a favorable regulatory environment for Musk and Tesla. What regulatory environment? Tesla makes cars in the U.S. They don't need to import them from China. So even if he got Trump to say, okay, no import tariffs from the Chinese cars, I don't think a single Chinese car enters America anyway. So how could that possibly help? How could that possibly help him? Like, I mean, how could it? What you'd have to tell me what in the regulatory environment would be favorable for him when Trump seems to be more in line with eliminating the end of internal combustion, of saying, no, you don't get to tell Americans what they get to drive. I think he's more in line of being favorable to GM in his future regulatory environment than be favorable to Tesla. I think he'd be much more favorable to GM, and they don't like the credits, the 70. Why should the taxpayer finance $7,500 of your car just because it's an EV? They don't like that idea. So I don't know that. You'd have to tell me what regulation you think would benefit Tesla. If there's any substance to this theory following yesterday's events, which many guarantee Trump's victory in November, Tesla should be up bigly tomorrow. But again, you'd have to tell me what regulation it would be. I don't know what regulation there would be. Would Trump like Musk? Probably, because Musk says complimentary things about Trump. If you want to get in Trump's good side, just say good things about him. What was the analogy that somebody had used this analogy about Trump before? Trump is like a couch. He bears the impression of the last person who was there. So, if you are with him, you say, you're so smart, you're wonderful, you're great. He'll think that you're an intelligent person. And if he can help you out, he'll help you out. As long as you keep saying that he's a great person. He's easy to get things out of because you just have to stroke his ego. But again, I'm not sure what regulation would be favorable to Tesla in this case. Let's see, where'd we leave off? Every now and then it wants to jump to the bottom, so let me find it again. There it is. I'm not a Tesla. Okay. Walter is back. He sure is. Yeah. If you're having thoughts on Tesla, you're doing it wrong. I promise not to make Mark upset today. Thoughts on a 30, 30, 40 TLT, IWM, or XLU portfolio to outperform SPY during the rate cuts? 30 TLT, 30 IWM. Okay, so you're going for really high beta there, higher beta than and 40 XLU, which is rate sensitive. So you've got 70% that's very rate sensitive. I would think, I see what you're trying to do. TLT or XLU is what I would say. TLT or XLU. Take your IWM if you really want to go for that. Yeah, I see you trying to stick small caps in there. Yeah, the only criticism I would have with that is your 30% TLT, 40% XLU. They are, both of them are interest rate sensitive sectors. So XLU is going to have duration. Duration meaning it is going to be sensitive to changes in rates. But the dividend yield, I believe, on XLU is, I think, pretty much equivalent with the dividend yield on TLT. It's just a matter of who has better options. I don't know. I'm not going to criticize it. I think interest rate sensitivity is what you would want at this time. I think I'd be more 50-50. In other words, do 25 TLT, 25 XLU, keep your 30 IWM, but I'd go 20. I'd still be 20 in SPY, 20 in large cap value. I'd still be there. Do you have a price target on COPX? Not really. I just don't think, given the supply of copper in the world today, there is no shortage today. But there will be. There will be. There is consolidation going on in the industry, but it is not really between the majors. It's between majors and miners. Miners, maybe change it to the word juniors instead of miners, because you're thinking copper miner. Well, what do you mean miners? Miners meaning smaller. COPX is the miners, not the juniors now, the miners, the ones that actually mine the copper. And I think that the upside for copper prices are rather limited at this point, and I think they've had a good run. I still think a 48.40 straddle on COPX makes sense, but they're upwards at $47, $48 now. The risk to that trade is the US dollar weakening. If the US dollar weakens, the price of copper will go up, which means the margins for US companies will go up because they report their earnings in US dollars. They sell in US dollars and their earnings are in US dollars. There's the risk on COPX is a stronger US or a weaker US dollar. So a short straddle on COPX combined with a long position on the peso, you get a weaker US dollar, you're going to get a much stronger peso. You could hedge out risk on a trade like that. Why do you think ABR is under attack? Why do I think it's under attack? 3 short reports in a year, and as a result, an investigation by the DOJ and the FBI. I don't think it's under attack. I'm just looking at the evidence and saying it's under attack. It's under attack. Now, if you're asking not why do I think it's under attack, but if you're asking why do you think it's under attack, okay, it's hard to see where the stress is. So you could be asking in 2 ways. Why do you think it's under attack? Or why do you think it's under attack? Because it's easy. It's easy to attack ABR because it has a complex business model. The more complicated the business model, the easier it is to attack because it is complicated. It is hard to figure out. So you only have to have a few bits of truths in there where you can say, you say it's this number, it is that number. You said it's this number, it is this number. And then you can make up stuff in the middle. If you read the Ninja report and the Viceroy report, it's fantasy. It is designed to feed on your emotions, not your intellect. So I put a video up on YouTube defending there was a short report, a more intelligent short report done from a fairly exclusive club from a member, and I believe it was a CFA charter holder because CFA is the first 3 letters of their screen name. It was a more intelligent short report. The others were less intelligent, almost juvenile and stupid. So I made the argument, if I can defend the more intelligent one, then the others fall aside. And I defended it quite easily. It is a difficult company to figure out because of their model. Financially, it's complicated. So if you're trying to short something and you want to attack it, the more complicated the model is, the easier it is to convince people because they won't put in the work necessary. Quick follow-up on the topic of free will from last week. Each action and decision we make is a result of a neurochemical response that occurred milliseconds before the action or decision. You can't say that because you cannot move faster than your brain can think. You cannot voice your belief faster than your brain can think. So if you say, motion to me the moment you decide something, and I go like this, my brain will have already made the decision before I can move my finger. I will have already, it will have appeared that it happened before I made, because by the time I can speak it, if this happens in milliseconds, I can't speak in milliseconds. This happens very quickly, but then I have to express it somehow. I cannot express my thoughts at the speed of my thoughts. Do you get that? Because I must express it physically, which means I must expend energy, which means I must have made the decision first to expend that energy. I cannot instantaneously express what's in my brain at the same time because the brain reaction happens far faster. It's an electrical signal that happens, and electricity, well, I don't know about in your brain how fast electricity travels, but electricity travels as a function of the speed of light. You cannot move at that speed without breaking bones. You simply can't move faster than your brain can think. That does not mean you don't have free will. That does not mean that the brain made up the idea and then gave you the idea that you then accepted as your own. At any point in time, I can choose to do anything I want to do. If we conclude that we do not have free will, then no murderer is responsible for their actions. It's that my brain did it and my body just followed along. I am not responsible. I don't need to be incarcerated. I need some kind of drug to rebalance my brain. If we accept that nobody has free will, then there is no good and evil. There can be no good and evil. There can be no morality at all, because no one would be responsible for their actions. That's not a world I want to live in. That's not a world I would accept. And again, how do you know what happened milliseconds before the action or decision without some indication of when I have the action or decision? And since we must accept that any physical movement is by definition going to be slower than the electrical motion in your brain, it will always appear as if it happened before the decision, because who's indicating the decision, right? Neurochemical response was preceded by another neurochemical response milliseconds before that one ad infinitum. So logically speaking, isn't each thought and action we take the result of a domino effect triggered at the dawn of the universe? Well, then none of us are responsible for any of our actions. None of us. Let all the murderers and rapists out of jail, because none of them were actually responsible for any of that. Next time somebody in a bar that's drunk punches you in the face, I want you to say, "It wasn't them. It was their brain from the dawn of time. It wasn't them. It was inevitable that I got punched in the face." But if you left your house 1 minute later or 1 minute earlier, you would have been standing in a different place in that bar and you wouldn't have got punched, right? No, I think that it is a interesting theory, interesting, but I doubt that it is real in any sense other than in an academic paper. I discount the whole thing 100%, not because I think before I do something, not because I think, but because I cannot move at the speed of my thought. I cannot, no matter how hard I try to tap a button, the moment, if you say pick a color, red or blue, and I hit red, any brain scan will show that I chose red, if they can figure that out. I chose red before my hand even moved. It's because, try to figure that out. I have to communicate to you that I had the thought. It's not that my brain or that we have thoughts before we know we have thoughts. It's that we can't move as fast as the thought we have. We can't respond as fast as the thought we have. That's all that is. And I've heard this argument before from neurologists, and I've listened and I thought, but no one's ever talking about that. It just seems to me like it's missing a huge point. But it's interesting and exciting to write papers and books to say we do not have free will. Right? Do you agree that you don't have free will? And if you don't have free will, then anything you do is not your fault. Slap your mother in the face and cheat on your girlfriend. It's not your fault. Do whatever makes you happy. Or whatever makes you happy was not your choice to begin with. Right? I can't accept that. Let's see. What happened last Thursday? I didn't eat till I think 3:00, and I had a steak. That's about it. That's all I can remember from Thursday. You'd have to be more specific. So many things happened last Thursday. My front lawn got mowed last Thursday because I have a service for that. They do it every Thursday. That happened. Maybe that's what you were asking. Sitting for L2 in August. Can you give me some tips? Like what? That's a big question. Give me some tips. Show up on time. Don't forget your passport. I don't know what, I wouldn't even know where to begin on that. Let's see. Please ban Walter. He's leaving nasty comments and keeps deleting them. Walter's in the wrong place, I believe. I believe he's in the wrong place. Walter's got some growing up to do, I think. I finished 10% of your CFA level 1 course, and my exam is in November. Am I on a reasonable timeline? Well, where are we now? July? No, I'd say you're a little bit behind. You want to be done, I'd say early October to go into the 4 weeks review. Where mid-July, that gives you 3 months if you stretch it. You're only 10% done. Pick up the pace. I would say at 3 months done, you should be 30 to 40% of the way through. You cannot learn in a hurry. Your brain has a speed limit. Exceed that speed limit, you learn nothing. You have to stay under that speed limit, which means it's not a matter of going faster. It's a matter of putting in more time. You're going to have to pick up the amount of time that you put in per day, but do not speed through anything. It's not going to help you. In IBKR, is there an easy way to see what your margin requirement is? Yeah, there is. When you set up your trade, there is profile. You can click on profile and it tells you exactly what your margin is. One of the main dashboards there is a maintenance margin number, but I think that is a face value if all puts were exercised. No, that is how much margin you need right then and there. When it turns yellow, that's a problem. When that yellow line shows up on that thing, you got to get to work. You don't want that yellow line. How should I pick strikes if I wanted to hedge my SPY holdings? I imagine you're long. And what are you worried about? A sell-off? You're worried about it selling? Well, that means you'd be buying a put. So you have to tell me how much you're willing to pay for insurance, right? How much are you willing to pay to protect yourself? And that is how you would select your strike price, by how much you're willing to pay. Is it inevitable that the yield curve will steepen? Yes, it is. It cannot stay inverted. It can't stay inverted forever. It is inevitable that it will steepen. How do we position for this? Spot futures and how? Well, there is a curve steepener trade called TUT. The ticker is TUT, which is, I think, short 2 futures on the 2-year, long futures on the 10-year. To be duration neutral so that you benefit from the curve steepening. If you think it's going to steepen because short rates are dropping, then anything that's interest rate sensitive, anything that has duration will benefit. Can you tell us a bit of what I should consider when investing in residential and commercial mortgage-backed securities? I wouldn't touch the commercial MBS, but residential MBS. What due diligence did I conduct? I don't think there's much due diligence to conduct if you're buying agency MBS. That due diligence is probably already done for you. An agency has kind of like a de facto government guarantee. The only issue you have to worry about with MBS is you get your money back precisely when you don't want to. So as interest rates drop, mortgage holders who have high interest rate mortgages refinance their mortgage. They get a new mortgage, they pay that mortgage out. As an MBS holder, every payment you get is interest, principal, and prepayments. So if you get a lot of prepayments, you'll get your money back precisely when yields are getting lower, so you're going to reinvest at lower yields. You would like at high yields to not get your money back fast, and at lower yields to get your money back faster. It works the other way. At high yields, high yields and dropping, if interest rates are dropping, you tend to get your money back precisely when you don't want to because your reinvestment rate is lower. But right now, prepayments are, the PSAs on these things are super slow, way less than 100. I was going to suggest you stop bashing the short reports on ABR. The stock was getting too expensive, so someone took advantage of the downturn. I don't think I was responsible for that. I think the continual upward pressure in the market and the realization that rates are going to come down with a 40% short interest in ABR. I think it was more short covering than anything. Maybe somebody who was short read, watched the video and thought, oh, I don't like this idea. Yeah, this guy, got some points here. Maybe the short side wasn't right, but I don't think I was responsible for all of that. It would be nice if I was, but I don't think I was. Chances of ABR going to zero? A lot would have to go wrong for it to go to zero. A lot would have to go wrong. This is a company with a good management track record. They went through the last mortgage crisis. Yeah, they suffered, but they didn't do anything illegal, right? They did the right thing. You had insider buying after the short reports came out. So you have to think like one of them. And you have to say, okay, I read the short reports. If any of it was true, you may think this is hitting a little too close to home. Somebody's on to us. I mean, as the CEO, you might still say, well, I'm going to send a message and I'm going to buy some stock. But the CFO and a whole bunch of insiders bought stock. If there was any truth to the short reports, if there was any fraud going on inside, would have been hard to convince almost everybody to buy shares. Maybe one or two to support it, but would have been hard to convince everybody to buy shares. But they did. As I laid out in the market outlook, there was a story in the Wall Street Journal earlier that week about widespread investigations going on at the bequest of the GSEs. And you had huge fraud in mortgages that caused the great financial crisis. To ignore it now would be, and if it ended up being bad, to ignore it would be unforgivable. Jobs would be lost. Absolutely, people would lose their jobs, 100%. So you have to look into it because of the sheer damage it caused last time. And the GSEs are saying, look, there's some of this stuff going on. That is human nature. There will always be some people who will always do this stuff. You have short reports on ABR accusing them of it. You can't not investigate them at this point. You can't not investigate them. So, when the story came out, DOJ and FBI, I thought, it's not good, but it fits with the story in the Wall Street Journal earlier in the week that widespread investigations were going on. ABR is I wouldn't say favored, but they are as far as the GSE goes, they do have an advantage there. They are one of their better ones, one of the top ones. I think some recognition or something they got from them for being for doing good stuff. It's not a notice, it's an investigation. Right? It's not a notice. There's a different thing than a notice. Now, the SEC is not involved in this. So there's no allegations of accounting fraud going on here. They're looking for mortgage fraud, which comes from two places. Either the broker inside ABR is making up numbers to try to get things out, or one of the borrowers from one of the buildings has made up reports. So it would be a matter of, that's not ABR's problem. That would be the landlord's problem. which might put one of their loans or some of their loans at risk if there's fraud from the landlords. If there's fraud from the broker who says, yeah, I knew this stuff was garbage, but I made up numbers just to get them somewhere, or we made up numbers. Well, actually, if you make up numbers, it's because you're presenting it somewhere. Let's say that you're a landlord and I'm a publicly traded company and I've lent you money and you give me numbers and I say, those numbers aren't good. With those numbers, I'm going to have to impair this loan. So you know what I'm going to do? I'm just going to ignore your numbers and not impair the loan. That's accounting fraud. That's SEC, right? Because I'm not trying to get anything by changing your numbers. I'm just not being honest from an accounting perspective. But if you give me your numbers and I say, well, I want to sell your loan to these people over here. I don't like your numbers, so I'm going to change your numbers and then give it to these people over here. Now that I've committed mortgage fraud. Not just accounting fraud, but mortgage fraud, because I've now used the fraudulent stuff to get somebody else to pay for something on the basis of something I made up. To the extent that they had a broker who did that, that's bad news. I don't see that would happen. They didn't engage in any of that when everyone was doing it back in 2006, 2007. To suddenly go bad now? I don't know. I don't think so. But you can never discount that there could be a broker somewhere that acted bad on their own. But to move something to a GSE, it would have had to go through a bunch of eyeballs, including the CFO, which means the CFO would have had to be complicit in it. That doesn't seem right to me. So I look at this as there was a bunch of investigations going on in that space. There are short reports on ABR. This caused a whole bunch of problems. Last time we ignored the red lights, the red flags. Kind of got to look at these guys. Just to cross them off the list, we kind of got to look at these guys. And I think that's the big part of it is they weren't going, if there was going to be investigations in that space, they weren't not going to be looked at, especially with what 3 short reports out there. Don't look at them and potentially risk losing your job. You kind of have to look at them. But if you're uncomfortable, you got to do what's right for you, right? I don't want to be the one that says everything's fine. There's always risk when there's an investigation. There's always risk of a rogue employee. There's always risk. So you got to do what's right for you. Me, I'm not that concerned. It's concerning, but I'm not that concerned. I think at some point there'll be a nice opportunity for me. I just want to see how it plays out in the market over the next week. I want to see there's a 15-day blackout period from earnings where insiders can't do anything. That 15-day period, I believe, begins Wednesday or Thursday of this week. So if I see a Form 4 from Monday or Tuesday with insiders buying, which they can, I'm all in. They wouldn't sell. My God, selling would be suicide at this point in time. Selling would be absolute suicide. And that would, and if there is something and you had a seller, you're going to jail. You're going to jail. It would be suicide to sell at this point. Sector Applied Series Nuclear Energy. Are you still trying to sell your house in St. Kitts? No, not now. I thought I'd put it up for sale. If it's sold, it's sold. If not, I'm okay keeping it. I don't need the money. So I'm okay keeping it. Do you foresee the rally in stocks broadening out to small caps? It already has. In other parts of the S&P, if the Trump trade gains momentum. Yeah, because the Trump trade at the heart is lower rates, weaker US dollar. But the one thing that he can get done is lower rates. That's the big thing on the Trump trade. Smaller banks still a risk of commercial real estate loans. Yeah, the regionals still have that. You can do cash secured puts and covered calls in a cash account on IB without having 100K. Well, there's a good answer. Mentor, a hero, and you have no idea how often I speak highly viewed others. Oh, thank you. What are your thoughts on the use of flashcards for CFAI prep? Sure. I mean, it's just a way to drill yourself. I've in my whole academic career as a student never used flashcards, not once. I mean, you can make up your own. I've never once used flashcards. So, for me, I would say I've never used them. I don't know. I don't know why I would start. But if you've used flashcards before and you found them successful, I see no reason why they wouldn't do the same for you. Any way we can receive an alert when you make a live trade? That's an interesting question. As of now, what I do is I tell you what new positions I did take, and I tell you what I'm looking at, what I would be interested in before it happens. Live, I don't know how I would get that done, because I would have to do the trade and then I would have to find a way to communicate to you that I just did the trade. I don't know how I would get that done without an app. And in the app, I mean, I'd make the trade, then I'd make a posting in the app that I did a live trade. I have to be careful with that, right? I got to be very careful with that stuff, because if a securities regulator says, notices a pattern where I post a trade and then there is a follow-on effect because 100 people or 200 people then follow in and there's this follow-on effect, I have to be very careful that a regulator doesn't come along and say that I'm doing something wrong, that I'm manipulating things. Because once you have an audience of a certain size, you got to be really careful that you don't cross any lines. You have to be very, very careful. So if I did that and there was an effect and then I sold into that effect, I run the risk of not only getting big fines, but being banned from this game for life. That's too much of a risk to take. Now I can just, not sell into the rally. But what if I buy something and I put out a notice and it runs $2-3 and I think, okay, I'll take it. Thank you. I mean, I didn't expect that for a couple of months, but I'll take it. Thank you. And I sold into the very rally that I caused. That's a problem. That could be me just using my influence for personal gain. That's a big problem because it affects the integrity of the market. So doing stuff like that, once you get into that, there has to be a good reason why you're doing that. And you got to be very careful that you're not profiting from that. So, for example, Berkshire does that. It buys stuff and then it posts, it has to post something to the SEC saying what positions it has because it's big enough. And then it has this effect after. But it doesn't tell you the moment it does it. And they don't have a reputation for selling into the buying, right? They don't have that reputation. So they're okay. I just don't want a regulator knocking at my door saying, can we look at some things? Not that I have anything to hide, but I just don't want that scrutiny. So I'd rather be very careful when it comes to that. I'd rather say well in advance of what I'm going to do, or well after the fact of what I did, as opposed to doing it the moment I do it. Besides, I may do something because of a position I have in my portfolio that on its own would make no sense for anybody else to do. So without context, it might be dangerous to try to figure out what I'm doing. I have trouble understanding a 21 times forward PE is sustainable in S&P. What forward PE would you estimate S&P to be at the end of next year if it hits 6,000? That's all just, it's me just guessing. It's not a matter of, you know, what would be consistent with that. It's, you have a mean reverting level on the forward PE, and it is way above its mean reverting level. But it could be a function of there's just way too much cash out there. There's way too much liquidity. The Fed is not running off its balance sheet fast enough. It's not pulling money out of the market fast enough, and there's just too much out there. The more and more you have share buybacks, the fewer and fewer shares there are to go around. They all get bid up. So you can make that argument. I don't know if we've gone into a new regime where the market will trade at a higher PE going forward. There have been periods in the past where the average PE of the market increases. Do a middle finger. Yeah, I did a middle finger. Didn't do anything. That's iOS, iPad OS feature last year. Is it? Well, I didn't know that. That's the feature. So when I do this and the bubble shows up like that, that is a function of my Mac system and not a function of YouTube. That's kind of a useless thing altogether, isn't it? I mean, where else would I use that? It's kind of seems rather useless to me. It's kind of neat. Let's do it again. Let's see if we can get the fireworks going again. Look at that. Look at that. That's so clever. That's kind of neat. See, now I'm going to be hooked on it. Now I'm going to be doing it all over. And I'm going to be doing all sorts of gestures just to see what I can get out of it. Do you have some material prepared, posted on the platform on business development companies? No, I don't. No, nothing on that. Not to say that there wouldn't be anything at some point, but right now there's nothing. IBKR bond scanner. I noticed there was stripped principal. Yep, and stripped interest. Yep, I see coupon pay. Yep, the price for each is around 27, respectively, while the full bond itself is around 102. Shouldn't the principal? Well, understand the bond has coupons. So the bond is priced at some percentage of par. 102 means you pay 102% of par. A zero coupon bond is just a pure discount bond. You buy it at a discount and it matures at face value. So because it doesn't have coupons, it's not going to trade on the 100-point system. The 100-point system it trades at is a pure discount. So 27, you pay 27% of the face value because there are no coupons. It's just time value of money. That's all it is. So it is a zero coupon bond. Strips are zero coupon bonds. So no, it would not be priced at the same price as the bond because the bond has coupons and principal, whereas strips only have principal. How many years did you teach in college? I usually have 7-year cycles. Like about every 7 years, I change. I get bored of whatever it is I'm doing. 7 to I think 7, 8, 9, 10, 11, and half of 12. 5.5 years and 8.5 years. 8.5 years. Does the 220 package have the same rights as the 440 package for non-CFA concerning your trades? No, only the 440. Only the you must be at the applied level for it. It's because of the code. Who has permissions to see what? Once you start going with multiple things, the code becomes very complex. It's easy to say applied level before July 31st, all rights. Then it never changes. It's easier to do that. But once you got to start doing a whole bunch of things, it's the code that becomes expensive. To keep things at an affordable price, you have to pay attention to your costs. If you're going to be an accessible price, if you're going to be the low price competitor out there, you must also be the lowest cost competitor, which means you have to look at every little thing that you do. If it takes an extra 4 days to write code, that has to be paid for. That has to be reflected in the price of what you do. So everything is important. Remember that if you're starting a business and you say, I'm going to be the leader on price, I'm going to deliver a lot of value for the price, you have to be the cost leader as well. You can't have the costs that everyone else has, but a lower price, unless you're willing to earn like a little bit, in which case you can't make mistakes because your margin's not big enough to forgive you for mistakes. So if you think that, well, that's not really, how hard is it to do for all of these? Everything has a cost. And if you want to keep your price low, you've got to simplify your cost structure as much as possible. So, what do you think is the right time to sell a stock? It seems like even someone like Druckenmiller sold Nvidia a bit too early and missed the opportunity. Well, listen, you're never going to figure that out, the right time to sell a stock. It's the right time for you. What's the right time for you to sell a stock? If you're selling a position, usually you'll sell your position in segments. That if the stock rally, you might have a rule. If the stock rally, I think it goes up 40%, but as soon as it's up 20%, I'll take 10% of my position off. If it goes up another 20 to my target, I'll take another 20% off. Or maybe I'll sell some in the money calls to sell it, in 2 months. And if it pulls back to a price I would have bought it, I make all the money on the calls. But you have some exit strategy along the way. But to sell 100% of your position, you would have to think that this is it. You'd have to have a fairly confident position that things aren't going to get any better. So take CapREIT, for example. I have 64,000 shares, more shares than I really should own. As it goes up, I will lighten up at certain strike prices by selling calls. I will lighten up, and I'll have no problem with it being called away from me at certain strikes, because I would want to lighten up on the way up to get back to what I think is a large position, but not an overweight position. I have 64,000 shares, and I still have 550 puts from 46, 45, 44, 43 that expire this Friday. So as long as it stays above $46, all those puts will be mine. Mine. Love this game. Unless, of course, CapREIT falls to 45, then I fucking hate this game. But right now, I love this game. Your office hours times are horrible for Australians. I will still join at 1 a.m., 4 a.m. Yeah. What's your view on home builders in the short run? Sell puts? Well, we expect rates to drop, but rates haven't dropped yet. That's the thing. They haven't dropped yet. So the fundamentals aren't going to support higher and higher prices. Not yet. But the market looks forward, not to what's going on today, but what will happen. We run the risk with the home builders of it getting to a point where when you get that first cut, that 25 basis points, they'll be overvalued for just a 25 basis point cut. I think they really ran up a lot. It would be hard for me to chase the price of the home builders at this point, where we are now, without seeing more conviction that there are rate cuts, but then that would be put into the price. If there is some rotation out, if they do pull back a bit, yeah, I would seem to think that selling on probably just Lennar and DHI might make sense. 2025 level 2 material, I believe, first week of August. Did you buy ABR? Not yet. If yes, what price did you pick it up? If not, when would you pick it up? I want to see what happens this week. If I see a Form 4 from any insiders Monday, well, I won't see it Monday or Tuesday. If they do it Monday or Tuesday, I won't see it till like Thursday or Friday. If I see a Form 4, I'm in. They have earnings the first Friday of the second month. So August, the first month of earnings is July. The second month is August. Usually it's the first Friday of that month before the market opens. Might be worth waiting. I also want to see what the price action is going to be this week. There was big sell-off last week. Usually that's not the end of it because it's people in the market that sell. Then you get people who come home after work Friday, open up their account and say, what the hell happened? And then they put their orders in to sell on Monday. Let's see what happens Monday. Let's see what kind of downside we get throughout the week. And then I'll see how I feel. I'll see how the information rolls out. There might be information coming out. There might be something that, it's a little too early on the day that the information came out and you had a big down day. It's a little too early to jump right in there. I'm willing to step back for a bit just to see what the price action is. But if I had to say guilty or not guilty right now, I got to say not guilty. I would be leaning not guilty right now of anything. If I had to pick guilty or not guilty, if I had to pick, if I had to say, are you buying on Monday or not? The answer is no. Even though I'm not guilty, the answer would be no, because there's a market. There's a whole bunch of other people who might have different opinions and different emotions. Let that play out first. It could bounce. You could have a significant amount of shareholders out there, larger institutions going, I know this guy. I know these people. This is an opportunity, and it could go right back up. It could. I don't know. That's the game we play. We play a future that is unknowable, and we use our best intuition. My best intuition tells me that after a big down day like that, after news like that, that's not it. There's going to be a little bit more. So I'm willing to wait a little bit more. Let's see what happens. I'll catch this tonight. Not sure if Mark got his Vision Pro. I got pictures sent to me of the Vision Pro. It is in stores now here in Canada. I got pictures sent to me. Let me see if I can share the pictures of the Vision Pro. Let's just get rid of this, get rid of that. Somebody was in a store and took pictures of the Vision Pro. There we are. Look at that. That's kind of what it looks like in the store, right? So that's it's kind of neat. Is anybody else? Well, that's it. That's kind of neat for V1. I think it can, as they go to V2, V3, if they get it a bit more sleek looking. The fact that you got this big strap over the top of your head and behind your head, they got to make it smaller and sleeker. But for V1, I'll give it a shot. I'll try it. I wouldn't mind seeing what it's like. What I like about it, and I don't know how well it's going to work, is I do a lot of reading. So I end up sitting like this a lot. And I got my iPad in front of me. And I end up looking down and my neck hurts and I got to hold it like this. And it becomes a real pain in the ass. With this Vision Pro, I can put a 10K up. I can put the thing on and I could just lay on the floor, and no matter what I'm doing, it's right in front of me. I don't have to hold anything up in front of me. So I can just sit in the chair with my head back like this to stretch my neck, and I can still read. I'm just wondering how this works. How do I scroll up and down? I'm interested. I'm eager. I'll give it a shot. It's not much money to spend to try that out. And if it does alleviate this stress on my neck that I have all day of doing this and, trying to, find a comfortable place to read or a comfortable way to read, if it can do that, it's worth the money right there just for reading stuff, because I read a lot. So I will get one. and then I'll show it to you on one of the live feeds. I'll see what it can do. Howard Marks, in his recent memo, says that the time for cheap money was gone and we should think new strategies. He suggested high yields as part of the portfolio. What do you think? Well, I mean, that is the field that he's in. He is in the credit space. So he may be thinking more pragmatically in terms of credit in itself. But I'm thinking further than that he might not consider. Is I'm thinking that there'll be no choice. You have, I think, 3 big reasons why rates are going down. The data suggests that rates can go down. Trump wants rates to go down. Trump looks like he's going to win. This is just a matter of time at this point, but it looks like he's going to win. You have too much debt. The last number I saw is that the Treasury is going to pay $982 billion this year in interest, $1 trillion. That gets added to the debt. That gets added. How long can you add $1 trillion to the debt? You got to get that interest cost as free as possible. Throw in number 4. Technology is deflationary, and we're going to have more, not less technology. I don't see stopping at 3.5%. I can't see it. I think we go back to the zero line. Now, throw on one crisis, which we always get a crisis. Every 10 years, you get a crisis of something. There'll be some external event which causes a crisis. There will be a crisis. Credit markets will seize up. They do at least once every 10 years, and back to the zero line we go. I don't know that there is an alternative here. It is, to me, it seems inevitable, not strategic in the sense of, given that in a game theoretic world, given what we know, that we would stop at 3 or 3.5. I'm looking past that, saying it's not going to be game theoretic. It's almost one-sided strategic. Trump wins, we're going down in rates faster than the data would allow, or Powell is gone, and he'll put his own people in. Period. So I think we're going down. Do you vote for Drake or Kendrick? I'm not really into into that whole thing at all. I vote for both because both are making money. I mean, if you can get into a big public fight where you both get audiences and you're both getting money, both of them are winning. So I vote for both of them. They're both turning this into a winning strategy for each of their bank accounts. So off you go. Have you ever thought about Market Outlook newsletter instead of along with weekly market? I hate typing. I hate writing. I hate typing things out. It's time consuming. It's tedious. You have to lay out your arguments in writing that are good. You need an editor to do that. You got to put your exhibits in. It would take me so much longer to do it in a newsletter than to do it in a video. So much longer. That's why I don't write. I don't write textbooks. I don't write chapters. It's just really long and time consuming. If I get 69% correct in CFA level 3 practice exam, good enough? Well, okay, I'll say good enough, but do you want to be good enough? I don't know that I want to be good enough. I want to be more than good enough, but it'll get you by. It'll get you by, sure. What should I do for the next month before the exam? Attend all of the office hours and attend all of the live sessions I do for the mock exams. Attend those. I've got like 40, 50, 60 hours of live stuff coming up. Already done 2 sessions. Next session is Tuesday at 2. And that session deals with derivatives and currency management. Show up to as many live sessions as you can. What do you make of Stellantis 8.4% dividend beaten up badly? Yeah, they have some problems. I forget what the headline was a couple of weeks ago, but there is a European problem they have. They did get money from Biden. GM and Stellantis, I think, got $1.1 billion, not each, but between the two of them, $1.1 billion for their EV. That's nice free money. That's a government grant. Here you go. I've never been a fan of Chrysler. Stellantis owns the Dodge Chrysler series, and I've always found them to be just cheap. I've never been a fan of them at all. But it's a nice dividend, right? I think that if I had to pick one company, it would be GM. Hope to finish level 3 in August, but I've gotten tired of the corporate world. What consideration do you believe are most important before giving entrepreneurship a shot? Entrepreneurship is it's a young person's game. It either works out or it doesn't. If it doesn't, you can always go back to the corporate world. If you're 45, it's risky, because if it doesn't work out, it's hard to go back to the corporate world after you've left it at that age. It's hard to go back. Not only that, there's more to risk. You have family, you have obligations, you have retirement. You can't just say, I'm going to give it all up and do this. If you're going to walk that pathway, it's better to do it when you're younger, when you don't have that much to risk. As you get older, it becomes harder to make that decision. However, there is a trap. The trap that I fell into is if you're never in the corporate world and you start with entrepreneurship, if you keep it long enough and you stay at it long enough, and let's say in your 30s, your early 30s, you say, okay, well, I want to go to the corporate world. Good luck getting a job. Almost no one will hire you because you've never been hired before. You've worked for yourself. So there are a couple of big questions. Number one, are you manageable? Will you take direction? Will you work for somebody because you've been your own boss? You made your own decisions. Are you going to say yes sir, no sir? Yes ma'am, no ma'am. Are you manageable? Number two, are we training our own competition? You already have a demonstrated ability to be entrepreneurial, to do it on your own. Once you know enough and you know our systems, you know our processes, you know our customers, are you just going to go out and do it yourself? So you become dangerous to hire later on. Keep that in mind, that it's not always a good thing to have an entrepreneurial career behind you if you then want to go to the corporate world. So sometimes it can be a one-way door. That might light a fire under you when in the entrepreneurial world to say that I got to make this work. I got to make this work now. But if you're not happy in the corporate world, you have two choices. Do something else or figure out how to be happy. But you can't continue on being unhappy. So can we start covering the U.S. housing market again in the weekly updates? Yeah, I think we can. We've left it for a while because I thought that home builders would go sideways for a while. So I thought there's not much to see here. Every week we pretty much get the same thing, not much to see. But you're right, supply is starting to increase. Some cities you do have prices that are below, that have actually are dropping because you did have oversupply. So yeah, I think we could probably bring the housing market back and maybe look at some of the indicators until it gets boring again, until we say, there's nothing to see here. Every week I'm saying the same stuff. I'm sure I don't see another entry point for home builders. Okay. Have retaken a full position in FCX or COPX after you had some of your FCX position called away? I think they're sideways for a while. So my puts on FCX expire Friday. I had 47 puts. They're not going to be put to me. There will be weakness at some point where FCX revisits 50, 49, 48. There will be at some point. I'll do the 47 puts again. I'm good with that. Maybe the 49 puts this time. But I think they go sideways for a while because I don't see copper exploding yet because we have lots of inventory. Maybe it doesn't go to 360 again, but I don't see it breaking 520. I see it sitting around the 440, 455 level for a while. I see gold kind of hanging out where it is. And Freeport is copper with gold. Newmont is gold with copper. Both two nice places to be. Newmont is what, 46 now? I think we started looking at FCX when it was $36 to $38. It's 51, 52. Newmont, I started selling puts earlier in the year at what, 36.50. Where are we now? $46. These are not bad returns for miners in that short period of time. That's pretty good for miners. You can't get that every 4 months. So at some point you got to say, look, this miners just don't behave this way. We're going to have to go, we'll probably go sideways for a while, in which case, if we are going to go sideways, that's a nice place to sell puts. I wouldn't re-jump into them. But at some point, I would want a much larger position in copper than I do have. Do you think homeschooling for kids is a better way of education in places like Costa Rica? Yes. Or any other country where education system is not well developed with relatively worse conditions standard? Yes. Yes. If you want a good education for your kids, an English education, the private schools or homeschooling. But yes. That is the big problem in Costa Rica, is education. If more money was spent on education within a generation, you could solve a lot of problems. But that is an issue. You got a lot of people that have less than high school. And when I say less than high school, I mean, I'm talking grade 8, grade 7, grade 6 education, and then they stopped. That's it. Even as low as grade 4 education. I've been working on a snapshot analysis of the housing market. Could I provide some data point summaries in this week's market Q&A for you to poke holes in? For just put them in the comments section under the video. I do the Q&A usually Tuesday night, Wednesday morning. If they're there, I answer them. I try to answer every question. Will you sell ABR puts when the market opens, or wait to see some more Form 4s? I don't know that I will see Form 4s. I'd like to. If there is, that's a clear signal to me. That's all I will need. That's a clear signal. But I'll see what happens as the market unfolds. It's one of those things where it's on my radar. Believe me, it's not like I'm looking at it going, it's on my radar. It's something I want to do. It's on my radar. I'm going to figure out something. I still have October 13 puts at $1.75. I still have those. I don't see myself closing those, but I still have those. Just cleared CFA level 2. How can I prepare for level 3? Not sure if I can make it. I was also doing my master's. Then do your master's, right? I'm planning to write next year in August. Do your master's. Get that out of the way. Level 2 doesn't expire. There's plenty of time to do your level 3. Besides, you can't get the 3 letters till you have the work experience anyways. So why race to the end of that line? Get the master's is the more important thing. Get that out of the way first. You don't got to do it all, right? Enjoy your time. Focus on your master's and give yourself some time to be young. Give yourself some time to live in the moment. There's plenty of time to do your level 3. That would be what I would do. I wonder what IV will be on Monday. We ended at 73%. That is, I tell you, on the open, 9:30. That's what I'm looking at. That's what's going to be on my screen. Also, since you don't have a long position, would you consider selling in the money puts for August? Well, I do have a long position because I'm short the $13 put. So I am, in essence, positive delta. I am long. Do you have any textbooks in your mind for learning about banks? I hear a lot about Chowdhury. Yeah, he's good. He's good. I have a couple of his books. He's pretty good. I think you'll do well with him because he is both academic and practical at the same time. and he has worked in the banking industry. So he is good. I like his books. Yeah, I like his books. You think the AI revolution will have a big effect on finance jobs? I think it'll have an effect on a lot of routine cognitive jobs. Yes, but non-routine, no. I think we're focusing too much on the I and not enough on the A. It's artificial, and it's not intelligence. From what I'm seeing right now, it is very good at a lot of cognitive processing of linear thought, of stuff that you can get somebody to do. It would just be time consuming, but you cannot get somebody to create a, you can't get it to create a whole new product. Let me give you an example, and I don't know where I last used this example, so if you've heard this example, just bear with me. Let's go to 1978, and you are JVC, and you say, we want, and let's say that AI is the state it is now, and you say, we want to create the next generation of music players. Now, if you remember 1978, this was the era of the big boom box. I mean, the big one. Roller skates, not roller blades, roller skating and boom box. Everyone had the big thing on their shoulders, and it was big. Everything had to be bigger and bigger. How big of a stereo can you carry around? That was the thing. Put AI to the task. AI would have come up with a much more beautiful, bigger player, incorporating a whole bunch of features. Maybe it said, of all the features out there, this ones don't get used. There's a lot of chatter online about this feature and this and this, and here you go. Sony shrunk it down to something you carry with little headphones and made it small. Artificial intelligence never would have come up with that. Never would have broke and come up with something completely different and went super small instead of going big. It would have looked at the data and then gone from the data. It would never have departed from the data, taken it all, thrown it out, and say no. Artificial intelligence could not have come up with the iPhone. To make a phone without keys, without a keypad. Everybody who made a phone starts from the keypad. Well, what functions are hiding behind what keys? How many functions can we hide behind the keys? AI would never have come up with the iPhone. You needed a human to come up with the iPhone. AI would never have come up with those things. AI would never have come up with AI. Right? It cannot do those things. And even now, there's a really good documentary on YouTube. I was watching it this afternoon. Let me see if I can find it. Oh, I got those screens closed and I stopped. So this is what it was about. It was about AI. And all these companies that say they have AI and what is really going on. It is surprising how little the algorithm is actually doing. There are armies of people around the world that are making the decisions for this and getting paid 3 cents for this decision, 2 cents for that decision, half a cent for this decision. And they have to make a decision about something, and they get paid for doing that. That behind the scenes, it's just an army of people getting paid pennies for a decision, making a lot of the decisions for the algorithm. That it's not that a lot of the companies who say this is our algorithm, it's not actually their algorithm doing it. It's actually a bunch of people making decisions in real time right then and there and getting paid 12 cents for this decision, 2 cents for that. So I was watching this going, wow. And then there was one part where I thought, okay, stop. This is training. That's all. What you're talking about now is training, where somebody was getting paid for putting boxes around humans in a video, and then going to the next one, putting boxes around and getting 1/10 of a penny for every box they drew. Every 10 boxes, they got a penny. And I said, well, you have to train the algorithm somehow. So that one didn't bother me too much, but it was the algorithm in use and the number of people who were actually making the decisions behind the scenes for pennies. But the system was saying powered by AI, and it wasn't. It was powered by humans. So you look at that and you say, well, that is a big difference in what's going on now. It was a documentary done by a European, from France, by a French crew. Super interesting. I mean, I watched that whole thing nonstop, and normally I watch things in segments, but this I just kept watching. So do I think it'll have a big effect on finance jobs? I think it'll have a big effect on the productivity of finance jobs, but overall, no. No. Like any sales job, customer service, or analyst jobs, will these jobs exist in 10 years? I think so. I think sales will still exist. Customer service may not. Analyst, a lot of the more labor intensive stuff that you have to do that doesn't require much thinking, I think will be replaced. It'll just make you more productive. Instead of following 5 companies, you might be able to follow 10 companies now. US is consistently leader in medical research and innovation. Yeah, which is then used by other countries. Sure. Their success is an extension of the success of the US, at least in that field. Well, I did say that. I gave it to the US in terms of innovation and capital. They're still the world leader there, right? What countries are on the rise? India. India is a big one. Mexico. Developed countries. I don't think so. Now, when you say on the rise, it's living in a country is more than just an economic environment that you live in. There's a social environment as well. It's a more holistic attitude that you have to take about the quality of the life that you have, and it doesn't mean that it's maximization of economic benefit. Not if you live in a violent country. Not if you live in an unhealthy country. Not if you live in a country where you have to be careful what you say in public, or you might get punched in the head or worse, shot. Right. So there are trade-offs of what you're willing to accept. So you have to look at it more holistically. And just because something is good for one person doesn't mean it's good for another. Why are many shipping companies under their book values? Would you take advantage of China current weakness? No, I don't think I would touch China. Why are many shipping companies under their book value? So the book value, well, let's try to put this in context. There's book value and then there's net asset value. Book value is not necessarily net asset value when you have income producing assets. So each ship that a shipping company has is like an apartment building. It has a stream of cash flows based on how often into the future it's going to be booked. And it could be like an office building. It could be like an apartment building, or it could be like a hotel. So ships have time charters. That makes them more like office buildings because time charters are usually for 5 years or 7 years. So you have cash flow for 5 or 7 years, and that ship will be worth the present value of its future cash flows. You can have ships that are more like apartment buildings where they don't have time charters. They have voyage charters, and these voyage charters are 3-4 months at a time, but that they have a steady stream of customers throughout the year where they will have voyage charters. Or it could be like a hotel where they charter in the spot market for whatever they get. They might have a 2-week voyage, then nothing. Then they're in the spot market for the next 1-week voyage, and this kind of thing. So the more shorter term the cash flows, the more riskier it is, the higher the discount rate for that particular ship. You have a situation where shipping rates went way up. So as shipping rates go up, market values go up. But you have to think about the future. Shipping rates are elevated right now because the Red Sea sucks, Panama Canal sucks, piracy is all over the place. So you have the longest voyages going on right now. To get shipping rates higher, you would have to have some reason for why the capacity of ships would decrease. That would mean longer voyages. Well, what more are you going to shut down? Right? So the belief is that rates are going to decline from here, which means the market value of ships are going to go down, because if rates go down and you're pricing it out as net present value of future cash flows, the market value of ships are going to drop. So if you think about the book value, which is historical cost, if market value is expected to drop, obviously the stock will trade below its book value per share. I don't think, after all the analysis I've done, that there is a buying opportunity in ocean shipping. If there is, it's dry bulk. Of anything, it would be dry bulk. And probably more so on companies that are more concentrated, probably Panamax and up. For tankers, that's the more that you have alternative forms of energy, the less likely you are to require tankers. Container shipping, wouldn't touch it. Wouldn't touch container shipping at all. These are the best of times for container shipping. It's only going to get worse. The order book is full. But for dry ships and tankers, the order book is very, very light. So there's not a lot of capacity coming on, but all the big capacity sucking things are already in the market. So I don't see much upside to shipping companies at this point. If I had to pick buy, sell puts, or sell calls, I'd be selling calls on shipping companies. I'd be selling calls because I don't know what else could happen in the world that hasn't already happened to make voyages longer. What do you think about crypto versus small caps? I think nothing of crypto. Crypto, I think, is worth zero. It's only worth what it's psychologically worth. It has no fundamental value. At what level would you be willing to sell some upside calls on Goodyear? I don't think I would sell upside calls. I don't have a reason to sell upside calls. So I don't think that I would. Unless I own the stock, then I would sell covered calls, but I just wouldn't sell naked calls. Did you ever get your LW80 puts? No, I did not. Are you trading the post-earnings announcement drift? The post-earnings announcement drift effect? I don't trade things like that. That's an event. It's not really a trend. It's not my thing to look at little things like that. That's not my thing. It is true the U.S. is a leading economy, but the cost continues growth in economy is a segmented social okay, that's just a comment to somebody else. He was like 1 centimeter away from death, to be fair. Well, yeah, there's a difference between, like when you say near-death experience, that has a very particular meaning. At least it has evolved to have a particular meaning, that you were so near death that you had this experience, and then they brought you back and you say, oh, I saw the tunnel, I saw the light, there was a guy in a big white gown talking to me, like that's a near-death experience. Trump had a close call with death, but not a near-death experience. So I'm not saying that, he could have been killed. Yeah, you're right, 1 centimeter another way, it would have taken out the side of his head. But that's a close call. That's not a near-death experience. When is 25 level 2 material? August, early August. How is your skin so good? Is it? Thank you. I don't know. Uh, Healthy living, I guess. I don't smoke cigarettes. I don't do any kind of drugs. I don't drink alcohol. I sleep well at night for the most part. I don't eat fast food. I'm clean living. I don't use a lot of like conditioners and moisturizers on my skin either. I don't know. How old do you think I look, by the way, for those of you out there? If you had to guess my, other than the silver hair, by the way, this started turning silver when I was 26. I started going silver on this, and um, I got my hair cut a couple weeks ago, and they wouldn't. I brought the color; they wouldn't color it because normally I try to color it brown like it was when I was in my 20s and 30s, but they wouldn't do it. But if you had to guess, how old do you think I am? And then I'll tell you how old I actually am. Um, on the video, he was saved because he was watching the screen next to him. Otherwise, he'd have been dead. Please watch the video. He was near death. Okay. I think we're saying the same things. We're just using different words. Among my people, Canadians, among my people, when we say a near death experience, it means a particular thing to us. It means that you were basically dead. You were on the table, you weren't breathing, you weren't cognitive, and you had this experience. You were so near death, you had an experience, a near death experience. A bullet flying past me is a close call. I mean, that's a close call, but I didn't have a near death experience. I had a close call with death. I think that's what you mean. Uh, Particularly, I believe it's more of a Western thing. I think most Americans would say the same thing. Yeah, near death experience is when you experience something that you feel that you were on the other side, that you had died and moved on and then came back. That's a near death experience. But I mean, I was at a stoplight once and it turned green, and I wasn't paying attention, and I didn't go, and boom, a car just blew right through the intersection. I thought, holy shit, that was close. But I didn't have a near death experience. I had a close call. Do you get that? Not a near death experience, a close call. One of them, I'm nowhere near death. It was a close call. I could have been dead, but I wasn't. The other one, I was seriously injured and harmed and very close to death. And I had this experience, but then the humans brought me back. I was almost godlike, and the humans brought me back. So I think we're saying the same thing. We're just using different words to say it. Would you consider completing the oil and gas segment? You've done an exploration and production. Any chance you do midstream, downstream equipment? All of them will be done at some point. It's just a matter of doing them. So it's a matter of which ones would have the greatest potential now, which ones would have the greatest impact. And for different sectors, you try to find the sub-industry that has the highest weight. I don't know how much weight those have. I chose exploration and production because I think it has the highest weight. What did I do to my hair now? There it is. I messed it all up. Treasury Futures did some interesting move on open. Yeah, they did. ZT was down not just 20, it was down like 108. That is 40 32s because they trade in 32s, right? It was down like 40 32s. I don't know where but then it did come up. So where are we on ZB here? 31 32s, 0.81%. That is curious, right? That you would have that down. Do you see more of this dynamic on the spreads accelerating in our current context narrative around rate cut? Yeah, I think TLT is well supported here. I think ZT. You're looking at ZT. I'm looking at ZB. ZB is the 30-year bond. ZT. Oh, ZT is almost nothing. Negative 0.03. That's the 2-year. 102, 177. That's almost done nothing. It's the long end of the curve that's suffering. Can you share your opinion on crypto allocation if we expect rates to decrease? I would have a zero allocation to crypto. Is crypto a scam or a hidden gold rush? It's a scam. I don't think it's a scam. It's a currency for criminals. That it has no broad market appeal. It's a currency for criminals. It is statistically proven intellects prefer Diet Coke to Diet Pepsi. Wow. How important are ethics for your investment decisions? I don't know that ethics really plays a role in my investment decisions. If you mean ethics in the sense of I don't want to invest in companies that are doing bad things, like I don't want to invest in oil companies. Couldn't care less about that. I think the environment is important. Let's not pump chemicals into the water. Let's not pump sulfur into the air. But I think discounting carbon capture is foolhardy. Well, why not? Why not use carbon capture? Why move away from let's solve the carbon problem. Let's not just throw it out. So no, I'm not big on that. I don't think I'd buy a gun company. It's just not my thing to bet on guns. That maybe I have a personal problem with that. I wouldn't do that. Do you watch House of Dragons? I did the first season. I see the second season up, but I forgot the first season. So I'm thinking, how did the freaking thing end? I have a vague idea of how it ended. So I think I'm going to have to rewatch the last few episodes of last season before this season, try to find the time, right? See what happened to Trump last night. In your opinion, how does this event impact his future as president? I think it almost guarantees his win. In the market outlook, you comment IVP for 52.26.13. Where or how did you get the IVP numbers? Open up Options Trader. At the very top, there's a little icon, a wheel icon, gear icon for settings. Click on that. And then you have some breakout columns, 2 columns. In one of the columns, there's volatility. Expand it, and then you'll see or is it in this column? It's in one of the columns. You'll see 52.26.13 IVP. Click on it, and there's an arrow that says add. That adds it into the middle column, which is what you see displayed on the options chain. Then click apply, and you're good. Is there a way to tell when the short sellers have covered their positions after the short reports are published? I don't think so. How long would you say they normally stay short? Staying short's expensive. It's expensive because you got to pay a borrow rate. So it's not cheap to short. It's easier to do it with options, but options do expire. Could you give us a hint to the valuation of your business that you sold for? Cannot. I did fairly well, is about the best that I can say. But I can't say more than that because it's all in NDAs, non-disclosure agreements. I don't know if the NDA has an expiration. I don't know if, like, after 5 years, if I could say, here's the number. I don't know. Should I close my July 20 TLT 93 calls? Since most macro news is out and volatility may subside, given volatility has subsided. I mean, I don't want to give advice on what you should or should not do. You should do what you feel right is good for you. Would I buy? When you say July, that's next month, right? No, July 20th is, well, that's Saturday. You don't have July 20th. You have July 19th. TLT calls, unless you mean July 2024, or sorry, 2025, in which case I would say it's way too early to tell. But you have July 19th. Yeah, July 19th. I don't know that there's a catalyst this week to get it above 93. But there could be. but I don't, I mean, it's, I'd be thinking about it, but it would also depend on how much money I got tied up on it and if it's even worth closing. Curious as 60/40 XLP, XLY, other way around, 60% XLY, 40% XLP. Will continue to outperform SPY since tech seems to be carrying the. Well, the back test I did was over a number of periods, 3 years, 5 years, 10 years. The combination of 60/40 XLP, XLY outperformed SPY. If tech goes down, it's going to take SPY down with it, right? I'm a British software engineer, 34 years old. Okay. Videos are invaluable. That's good. Is there a way to use calls and puts to achieve a higher return over the course of 40 years compared to 60/40 passive? Yeah, I do. I do. Calls are just a way to get upside leverage. Puts are a way to allocate to your portfolio if there's ever a pullback. So, sometimes I hear people saying, well, I like GM. I would buy GM if it got to $45. Well, then sell a $45 put. Make some money while you say it. Don't just say it. Sell a $45 put. If you're going to buy at 45, get 40 cents for it. Get 50 cents just for saying that you would. Then your average price is lower. So yeah, you can always do better if you know how to use the puts and calls. Do you think there's any alpha to be had in sports betting? Oh, okay. So two things there. Do I think there's any upside in sports betting companies? Yeah. Do I think there's any alpha? That's a different answer altogether. Alpha means that you're going to get some kind of performance that's better than the expected performance. So let's say you have an index of sports betting companies, and sports betting goes up. Well, the index will go up. The question is, could you have done better by picking certain companies than what an index would have done? That's alpha. And that means you just pick some and you ignore others. You pick the ones that you think are going to do better than the average. That's alpha. Alpha is not buying something and seeing it go up. That could simply just be beta. So do I think there's alpha? I think there's alpha in anything if you're good enough. If you can figure it out, maybe there is. If you can't. So here's where you get alpha. You say, let's say that you're comparing it with the S&P, and you say, I think sports betting will outperform. So you buy more of the sports betting than you normally would, let's say. Or you think, I think it'll underperform, then you buy less. In both cases, you got alpha, right? Holding less than what an index would hold or holding more than an index would hold if you think it outperforms or underperforms. In both ways, you get alpha. So is there alpha to be had? Yes. Alpha is not a function of the security. Alpha is a function of your skill, right? If it were a function of the security, it would be beta or alternative beta or smart beta. Alpha is what you bring to the table, not what the security has to offer. So do I think there's any return? Sure, I guess. I don't know enough about sports betting, but sure. Do I think you can capture the return in a way that is better than anything else? I don't know. That's a good one. Only you can answer that. It depends on your skill. What is the best option strategy if you start with 10K and make 100K out of it in 3 years? You want a 10X in 3 years. $32% a year at 10K. First of all, with 10K, you can't afford to have anything put to you. So I would say it's going to be brutally difficult to get done. That doesn't mean it can't be done, just means you have to choose your underlyings very, very carefully. And you better have a lot of underlyings because every month there'll be different underlyings because you can't keep using the same underlyings as they move up in price. If you move up your strikes, you're increasing your risk each time. 3 years, I would not make the 100,000 your goal. I would make the process your goal. What process do you go through to sell puts? Put a good process in place, the money will show up. Make the money your goal, you're going to reach for it. You're going to take on more risk than you understand and you're going to get hurt. Never reach for the money. Work the process. Get a process, work the process, and every day your goal is to work the process, work the process, work the process. That's success. Money will show up if you work the process. And get this idea out of your head of 10x in 3 years. Maybe it happens, but don't make it your goal. Okay? Don't make it a goal. It's an Apple thing, yeah. Why are the 10-year, 30-year yields up almost 10-year, 30-year yields are up almost 1%? No. 100 basis points? No. Yields up. I think you might be saying that wrong. I would say it again. Is investment banking the best place to start a career out of undergrad? Yeah, if you can get it. It is the best place to be, but it's not an entry-level position. No way. It is a long process. It's something you come to later. Considering a career in corporate development, but being told by many I should be a banker for at least 2 years for the reps. Well, if you're going into investment banking, go into the banking sector somewhere, but you don't just start in investment banking. What's your favorite Dragon Ball character? I don't even know what that is. Considering your CDN apartment REIT exposure, have you looked at Smart Center's SRU? Yeah. It has many of the same tailwinds as apartment REITs, rent growth, limited supply, rate cuts, etc., plus an 8% dividend yield. Plus, I believe Walmart's, right? Smart Centers, their biggest. They have what? Walmart, Canadian Tire. Trying to think of some of their other big clients. I can't think of any of the others. If they have any, I don't think they have the Bay. I think the Bay is at malls. I would avoid any mall REIT that has a big exposure to the Bay. I don't see them making it. I think that's the next Sears is the Bay. My God, they're not even repairing their buildings anymore. The Bay in Windsor shut down because there was something with the air conditioner. You don't shut down a store. You get it fixed. They didn't get it fixed. At the same time, I was at the St. Catharines Bay looking for bed sheets. The escalator was broken and there was no music playing and the store was deathly quiet and there was no one in there, not even staff. Looking around thinking, this is the sign of a store that's ready to shut down. I'd avoid any mall that has the Bay. Smart Centers, I think, are more. They're not covered malls. I just don't like retail in Canada just yet, but I'm familiar with Smart Centers. I know you've been asked this a million times, but can you give me an example of learning with applied level versus learning for just passing? I'm not sure what you're asking there. You mean for CFA versus CFA plus, to take the CFA saying, look, my focus is the CFA exam. Thank you very much. Versus I want to go a little bit further. The difference is this, the applied, the way I always thought about the CFA and the way I always taught it was that, and I used to bring, if you watch any of the videos I do, even in the core videos, I do bring real world examples in a lot. And I do take time to explain everything. Even if I don't have to, we'll derive formulas just to show you how to get them, even though you don't really need to know how to do that, because my theory at all times was, I am not preparing you to pass an exam. I'm preparing you to be successful in a career. And on the way, you'll pass 3 exams. The applied level is just leaning into that philosophy a bit more. I'm preparing you to be successful in a career. That's what it does. So there is passing the 3 exams. And then, like many level 3 candidates, if your focus was just on passing those exams, after level 3, you find it very difficult to hold a conversation about the market, because you can't apply anything that you've learned. You can't see how any of it applied, because you were worried about getting it right on a test, not seeing the bigger picture of when is this useful in the real world. The applied series is just that. It is applied. Sometimes it's easier to understand why we do something when we see why we do something. So if I say this is how we think about, or this is a derivative, for example, or a good example is, here is a carry trade, for example. It's hard to understand exactly what it is if you've never done it, if you've never seen it, if you don't know why you would do it, if you don't know when you would do it, what are the risks of doing it. All you can do is just memorize what it is. You don't really know what it is. Intuitively, you don't know what it is because you've never actually done it. But in the applied level in portfolio construction, in the paper portfolio, we actually do a carry trade. Let's sell $1 million worth of yen. We'll sell that yen. We'll buy $1 million of US dollars. To do that, you need about $40,000 to do it. Huge leverage, 25 times leverage. And let's buy something in the US, right? So once you do it and you see what it can do, and you see the risks because you see the profit and loss on your position every day, you start to understand, I get what this is then. So when we talk about the yen strengthening as being a risk to the unwind of the carry trade, rather than saying, okay, I don't know what that means, a risk to the unwind of the carry trade, I don't get that. You then realize, well, the yen was a low interest rate currency. It was a funding currency. So a lot of people were short the yen and long other assets. So if the yen is going to strengthen, the currency risk will take returns away very fast. You got to reverse that trade, which means you got to sell the targets that you invested in. You got to sell the US and you got to buy the yen, which could cause the yen to spike and the US dollar to sell off and T-bills to take a hit, or whatever they're invested in. Could be the equity market. So you then start to see how the whole chain of things are connected, because you actually got your hands dirty. You actually did something with that. So there's reading about swimming, and then there's jumping in the pool. No matter how much you read about swimming, and you can understand the physics of buoyancy all you want, but you're not going to be a swimmer. No matter how many books on physics and liquid dynamics you read, you're not going to be a swimmer until you jump in the water. No matter how much of textbook material you go through for the CFA content to pass the exams, you are not going to be an investor. You're not going to be an analyst until you actually do it, until you actually get your hands dirty and do it. That's what the applied level does. But I get it. It's a lot to do level 1. Focus on that. That's okay. The applied level has no expiration, none at all. But it's $320 right now if you're a CFA candidate, and everything is included. If you buy it after July 31st, it's $320. But there are new modules coming in that will not be included. Not only that, as I build out more and more and more and more of it, if the sector studies get, you get another 10 or 15 sector studies behind you, then suddenly $440 is too cheap, considering the amount of work that's gone into it. It might be $490 at that point, then $550. The price will go up over time to reflect just the sheer amount of content that will be in there. Being that it has no expiration, it's like, well, maybe I won't get to it now, but at least I lock in the price now. You can think of it that way. Or I would say, if you really don't see where you're going to have the time to use it, then don't. It's okay. That's fine. it's just not something you want to do at this point, right? I know you've been asked this a million times. Okay, Albany, when you set off on your path to build a business, did you have a clear vision for how that business would provide value? Was it a specific idea or general entrepreneur? No. And I would say some of the best ideas you do, some of the best businesses you build on day one, you don't know what it's going to look like in 5 years, and you should not know what it's going to look like in 5 years. You just know what your core value proposition is. In other words, it's your minimum viable product. And for the CFA, it was a teaching video on every reading. The minimum. I didn't have Q banks when I started. I didn't have mock exams. I didn't have any of that stuff because it wasn't necessary. In time, I had that stuff, but I allowed my subscriber, I allowed the user to tell me what they wanted, as opposed to me on day one saying, well, they're going to want this long list of features. No, you start with your minimum core and you start delivering that. And then you listen and you'll hear feedback. And okay, what about this? What about that? It's like, well, I guess I could do that. And then you build it around the customer as opposed to around some idea you had on day one, so that you don't end up building features and putting things in what you think has value, but nobody else feels it has value. So version 2, version 3, version 4 should flow from the feedback you get from the customer, not from what you thought on day one. Minimum viable product, your core value proposition, and ship it. That's an Apple strategy. What's the core? Ship it. Version 2, add some more, ship it. Version 3, so it's iterate fast and ship, iterate, ship, iterate, ship. As opposed to saying, well, we can add this. That was BlackBerry's problem, right? We can add this feature, and suddenly their product cycle got to 2 years. Apple had 9-month product cycles on the iPhone. RIM had 2-year product cycles on the BlackBerry. Cannot compete. You can't compete when your product cycle is that long. Let's see. Seeking career advice, 3 years at a big bank in operations, past CFA level 1 with networking. What else can I do to land an investment analyst research role? I am far removed from the job market. I've been asked this before about jobs. I'm just so far removed from the job market, I wouldn't have an answer to that. I'd say the biggest part is the networking, the social network that you have. Join a CFA society, I think, would probably be a first step if you're not already in one. Complete newcomer to your channel, asking off-topic question. Any comment on CFA research challenge and your outlook on cargo? I didn't follow that at all, so I have no comment on that. What do you think about BMW? Has fallen a lot recently. P of 5, a lot. So does GM, a really low PE. I think I'd be bullish on BMW easily. Best copper mines in Canada. I think there was I don't know, Quantum Group, I guess, but they lost Panama. It's a good question. Hudbay, I think I haven't really analyzed them very much, but I remember seeing them when I was doing FCX and looking at some of their reports, and it's like, okay, well, this is not too bad. Hope you're doing well. Wondering if you'll be anytime in Montreal. No, not really. Don't really go very far. Any thoughts about private equity certification? I haven't seen the curriculum, so I can't really comment. I just haven't seen it. Wow, what time we got? We're at almost 3 hours here, so let's do this thing. Let's scroll all the way to the bottom and work our way up for about 10 or 15 questions. wondering where he's reading the questions. Didn't see it in the chat. I'm reading it in the chat. It's just way back in the chat. It's just on the side of the screen. When I do the live thing, I do click on live chat replay. Yet I don't know why it doesn't show up when you replay the live. You don't see the chat window, but I click on live chat replay. I don't know. Must be me. It's only me. Apple's new features are 2 years old, 2-year-old Android features. Oh, well. What's your take on Nextera in the long term? I like it. Is it fair valued given the long-term view? I think it represents a buying opportunity. Any good books you're reading currently? No, I'm not reading anything. I spend most of my time reading 10Ks. So no good books. How can I invest in Canadian apartment REITs? I live in the U.S. and not sure if they are stocks, ETFs, or trade in the U.S. The only thing you can do on your trading platform is see if you can find them, see if they're listed. Could you do home builders and sector studies? I did a walkthrough of DHI. That's in consumer discretionary, but I could do a much more, that might be a good one to do because there's a lot to know about home builders and how they get their lots. Once world population peaks out, will most of the companies' market cap only decrease? I don't think so, except the most innovative ones which increase market share. Market cap is a function of a dollar value times number of shares with money printing, because the money supply continually increases over time. That market value could go higher on a nominal basis, maybe not on a real basis. Trump moves, will you move to the U.S.? No. I've sort of crossed it off. I joined a new role as an intern. We invest exclusively in GSEC. Could you share sources where I can learn more about analyzing bonds that goes beyond the CFA curriculum? There's not much to analyze in bonds. If you're in the government sector, it's not much to analyze. If you know how to discount cash flows, that's it for a bond. The biggest two things in terms of fundamentals for bonds is the Treasury and the Fed. What's the Treasury want to do? What's the Fed want to do? It's a lot of Fed watching and a lot of Treasury watching, and that's it. Other than that, it's the curve is the curve. That's it, right? You mentioned Apple winning on all fronts. Do you think Apple is fairly valued at current price? Yeah, I think you're probably close to fairly valued, and Apple may be threatening overvaluation. Their aggressiveness. I think you're at peak aggressiveness on what they can charge for things. My new computer was $6,500, no monitor. Monitor was $2,000, no keyboard, no mouse. I get my units in, I unpack them, I hook them up. I go, where's the keyboard and mouse? Well, you don't get those anymore. Everything's sold separately. So I had to go out and get a keyboard and mouse. Another $300. I'm $10,000 into this. That's a little much. I mean, it's a little much. $10,000 for a computer. I think that they're reaching for as much margin as they possibly can. I think you're pretty much at peak. You got to sell more quantity. Like revenue is quantity times price. They're really freaking effective on price. You got to sell more quantity now and relax on the freaking price. But Apple TV's gone from $699 to $1497 in a period of 3 years. You're talking about over 100% increase to be lectured to in all their TV shows. The only reason I continue to hold it was for Severance season 2, and that's in January. If it's a 2-year break between every Severance season, I'll just cancel it and then take it for 2 months, binge watch everything and cancel it. But the TV shows and the movies that come up with are, yeah, you know, it's only $14 a month. It's not a big deal. Almost $15 a month, not a big deal. But it's like, I expect in a couple of months it'll be 16, then it'll be 18. You'll keep pushing until I give up, or until I say enough is enough. But they try to find everybody's breaking point. This is at some point it works against you. No matter how good you are, it's going to work against you. This is, I mean, I went about as far as I was willing to go on the price of this thing. Any further and I'm out of the game. I'm out. So, yeah, I think they're fairly valued, if not threatening to be overvalued, given the aggressiveness of the margins that they want. What other questions we have here? I'm using 50, 60 million to generate 1 million a year through investments in low vol ETFs and dividend paying stocks. That's pretty pathetic. 50 to 60, 50 times 0.054. You can get 2.7 million a year just in 3-month T-bills. So you're underperforming cash. You're underperforming cash. I want you to sit back and think about that for a minute. You're underperforming cash. Your tag name is billionaire. I don't know, man. Maybe you inherited it, but you certainly didn't earn it with that kind of return. 1 million a year with 50 to 60 million, 50 million at a cash rate for the last year should have got you 2.7. Right? Can I speak to the and dividend paying stocks a solid? Oh, you're asking is using 50 to 60 million. I thought you said you were using. Sorry, is using. No, that's not a good strategy. It's not a good retirement plan because you can get 2.7 million with 3-month T-bills. You can get, I think, something like 6%, 6.5% on good investment grade commercial paper. There's a money market security that can even do better. No, it's not a good idea. Even if you bought 20-year bonds right now, 20-year bonds, where's my spreadsheet? What's the yield on 20-year bonds right now? Just to show you how bad that strategy is. 20 years are 4.5 yield. So take the 50 million and get a 4.5 yield on the bond. That's 2.25 million on 20-year US Treasuries. And you've locked that in for 20 years. You don't have to keep jumping in and out of dividend paying stocks and take on price risk. Take a 20-year bond and just be done with it, right? Okay, here are the guesses on my age. 50, 54, 69. Are you being funny or are you being serious? Clearly, I'm not 69 at having that reaction. I look 69 to you? 50, 55, early 50s, 62, 55, 25. Okay, well, I'm not 25. 51, 62, 54. Okay, well, you're all in the neighborhood. You're all in the neighborhood. I'll be 58 August 31st. I'll be 58. 62. 62. Come on, man. I got a 40 in there. Okay, that's, yeah, I'll take the 40. 25 is too much. 69. I want an apology on that one. Views on Nike. They're not going anywhere. I think they have some management issues. I think they need new leadership, but they're not going anywhere. So at some point, I think that'd be interesting, but they keep ticking down at the $70 mark. I'll keep watching them for a bit. Where are you with GM? I feel that maybe missed the rally. The second half, I think, is going to be challenging for GM. They have earnings coming up in 2 weeks, I think. I think their guidance will be more subdued than their guidance was earlier in the year. I think they'll point to a challenging environment, or maybe they won't. But I think the second half will be challenging. A few more here, and then I'll end it. Did you play golf? No. Yeah, I'm not seeing any that are new. Okay, I think that will be it. Question about the applied level: can we access it forever with new modules added? Up to July 31st. Starting August 1st, then any newer modules would not be included in the current price or in the current subscription. How are you feeling about Tesla puts with this gain in overnight trading? I haven't looked at it. I've already agreed to look at this China report second. This is 14 minutes ago. Second quarter growth of 4.7, missing expectations. China's economic growth comes in worse than expected. Well, let's see what is going on here. Yeah, I'm not concerned. I'm really not concerned. I agreed to lose a certain amount of money. That's why I bought puts. So and they're January puts. The overnight doesn't concern me. Nothing has changed on this. Any move on Tesla now is purely momentum and psychological, and has nothing to do with any fundamentals. It is completely detached from the fundamentals. But the fundamentals always show up. They always show up. They always do. They'll always trump everything else because they always show up. So I'm unconcerned about this. Doesn't really bother me. TLT down $1.21. Yeah, you know what? If it has an ugly Monday or Tuesday, maybe the 91s, maybe the 90s on that might be interesting, right? But yeah, I'm not concerned about these positions at this point in time. So I'm good. I'm good. All right. Damn, I thought you were 70. Alan, I want an apology. You thought I was 70? You thought I was 70? Come on, man. Do I look 70? Do I really look 70? Huh. Will you be back to Costa Rica? Yeah, I think the last few weeks of September, first week of October, I'll be back for a bit. And then I'm back in Canada for a while. And then I'll see how I feel. We'll see what the weather is like in September, but I know it's raining every single day. Starts around 2:00, ends later in the night. Every single day it rains. And the mosquitoes are just off the charts. So I don't have to stay there. Since I've been back, I haven't been bitten by a mosquito once. That's kind of nice. But it has rained a lot since I've come back. Yeah, so, all right. Okay. It is, ouch. 3 hour. I had my hand on the arm of my chair and I swung it and it went under the desk and my finger just, ouch. Yeah, let's end it here. 3 hours in. And I will see you all next week. Ciao. Let's do this one more time. Where are we? There it is. There it is. One last time. Look at that. I wonder what other gestures it can do. All right. Ciao. Oh, that's where's the end stream? End stream's down there. There it is.